Very good afternoon to all. We welcome you to Sunday afternoon to CCM IP's VCM on today's taxation aspects in capital market. We have a very eminent panel of CA Avinash Gupta ji, our chairman Anuj Goyal sir, Amitosh Singh ji and Amit Agarwal ji and Vinod Goyal sir. I welcome all and we start the proceeding. Before we go ahead, I'll like to introduce our chairman Avinash Gupta ji a bit. Avinash Gupta ji is the chairman of North India Regional Council. He's a fellow CA and he's a meritorious student throughout his life in SRCC and during the CA. He has done his LLB and LLM in International Taxation from Vienna University, and he has been very active in delivering lectures. Around 1,500 lectures he has given in various institutions. We welcome you, sir. With this, I request Avinash Gupta ji to give his welcome address.
Thank you, Kunalji. Respected Central Council member and chairman of the Capital Market Committee, Anuj Goyal ji. Respected speakers of the day, young and dynamic speakers with me, Amitosh Singh Kamboj ji from Chandigarh, past chairman of the Chandigarh branch, and Navya Malhotra, prolific and renowned speaker on GST. And good afternoon, everybody. Good afternoon, audience, for coming on Sunday afternoon to attend this very, very important program on the taxation part of the capital market. So it is always in dispute that how to tax the capital gain transactions, specifically with respect to the transaction which have happening in the capital market, whether it is a derivative transactions or an intraday transaction or a short-term capital gain and a long-term capital gain, then law is also changing. And there was a point on the contract note also, we see that the GST is applicable on many brokers, etc. These are all things that is there. And there is very little amount of clarity on these issues. And we as a common chartered accountant or as a common man is always accept whatever is being done by the stock market or the broker. So I thought that why not we have this, and we requested Anuj that the committee should hold this kind of a program, which may be hosted by NIRC, and I am very happy and obliged that Anuj in 1 minute, he accepted our request and he finalized this program with 2 eminent speakers for the day. And we are now doing this program, which is a committee on capital markets is doing this program and hosted by NIRC. So thank you, Anuj for helping us in making this program happen. And apart from that, as a small initiative that we have taken in NIRC after vaccination of 10,000 chartered accountants and their family members, the next thing what we have started is the mega tree plantation drive. So we want to plant 1 lakh trees in our region. So my request to all the participants that we have started this drive on 30th June and it will go till 15th of August. Till that time, we want to plant 1 lakh trees. So I request everybody to come forward, join hands with us, and let us plant this 1 lakh trees. And let us not only plant 1 lakh trees, but also nurture them, so that these plants will become trees soon. So that's how I want to make this drive. I request all of you to please come forward and join us. Apart from that, we already are doing a series of program under investor education awareness program with the committee on various aspects of capital market with StockGrow as our knowledge partner. So two sessions have already been done. Next 2 is in pipeline. On every Friday, we are doing this program. Legal awareness series, we have already completed. Now we have started yesterday FEMA series. So 1 program have already been done. VCM have done yesterday. 3 are left. So anybody who want to join this FEMA series, they can join us. Then coming time, we will be doing series on income tax, series on GST, series on international tax, series on transfer pricing, series on Ind AS, etc. So that will come in the due course. So do connect with NIRC. Do watch our website and other WhatsApp groups wherever there is a programs from NIRC. So that will be there. 2 important programs we will be doing soon. One is the on competition commission. This is something which is different, and you will be surprised, or many of you may not know that chartered accountants are allowed to appear before competition commission, and there is a huge opportunity which is available to a chartered accountant to appear in competition commission. So that's why we are doing 1 program on competition commission soon. And then we have 1 program from with the member of NAFRA and CAG He will talk about the role of chartered accountant and the expectations from a chartered accountant, specifically from the audit standpoint, that what he should do. So this is another program that we will be launching and introducing soon in our NIRC platform. So please stay connected with us, and thank you, and I welcome all of you to this VCM webinar that we are doing. So thank you, Anujji, for providing me this opportunity to welcome all of you. Thank you very much, Kunalji. Over to you.
Thank you, Avinash, sir, for your welcome address. Now I'll briefly like to introduce our speakers of the day. C. Amitosh Singh Kamboji. C. Amitosh Singh Kamboji is a FCA with an experience of 12 years in the field of direct taxes. He has also worked as deputy manager tax with the subsidiary of a leading law firm, Clifford Chance. He has been providing direct tax consultancy and opinions to his clients, and he has regularly appeared before the Honorable ITAT since last 8 years. He has rich experience in the field of tax audits, drafting SOPs, formation of policies, risk analysis and assurance, due diligence, corporate structuring, and tax planning. Currently, he is also serving as a vice chairman of the Chandigarh branch of ICAI of India and previously held position of treasurer also. We welcome you, sir, to today's VCM. Now, I briefly like to introduce our next speaker, C.A. Navya Malhotra ji. C.A. Navya Malhotra is an associate member of the institute. He has done his graduation from University of Delhi. As a post-qualification course, he has done diploma in information systems audit from the ICAI. Further, he has completed his master's in commerce this year. He has successfully cleared the GST clarification held by the Institute of Chartered Accountants of India's post-qualification certification. He has also been a special invitee to the Indirect Tax Committee of ICAI for the year 2021. He has deliberated and given seminar address more than 250 seminars, workshops, training camps on GST. We welcome you, sir, and we look forward to your address during the session. With this, I request our C. Vinod Goyal sir to introduce our session chair, Anuj Goyal sir ji. Over to you, Vinod Goyal sir. Kindly unmute. Vinod sir, kindly unmute.
Hanji. Namaskar. I am happy to see again you in this webinar, as I have been made session coordinator with so many webinars. Last time I had a webinar with this RK Code under the chairman of SIP of Sri Anuj Goyal. Right now, that time also I was the session coordinator, and I have been made right now as a coordinator. And the evening we are having more session on the GST, and I have been given the responsibility there also. So I thank all of our member, all of our chief guests who has given me this duty. And that before I take up the matter, I'll just introduce. Everybody knows about the Anuj Goyal, but it is our duty to give his formal introduction. Anuj Goyal, who is a chairman of the research committee, he is the main person who is contributing and who is helping this contribution of so many seminars, particularly in the Ghaziabad. Anuj Goyal, he is a member, CC member since last 14 years. He remained in the regional council for 3 years, and he was a branch member for 6 years. Recently, he is the chairman of research committee, oldest committee in the ICAI, and he is the vice chairman of capital market and investor protector. Investor protection we are taking up today itself, and capital market is also we are taking itself today. In the academic side, really I don't know how many qualifications he is having. If I open a page, he'll be, I think I will have to turn over the page taking his qualification. At the age of 22 years, he did his CA, he completed his CS, he completed his ICWA, and he is a dynamic at the age of 22 years. In addition, he completed all the 3 degrees. In addition to that, he is a DISA holder, he is a LLB holder, and one of the most prestigious institute, which is a reliable institute, which produces at least 150 advocates from the chartered accountants. Although they are having 200 seats, but out of 200, every year 150 chartered accountants are being made as an advocate. I can explain you, he is a very cooperative person. Whenever you go to him and whenever we go to him, he always helps this and that way. I am giving a current example. During pandemic, he has taken up the matter so seriously. Nobody can take the matter so seriously. I have the hospital, I have the medical college, but every time he used to dial me, Vinodji, एक patient आ रहे हैं, could you just tell to your staff to admit him? Next day again he said कि विनोद जी वो तो आ गए हैं, अब ये हमारे सीसी मेंबर हैं, इनके भी आगे को वो हैं एम्प्लॉइज हैं या जो भी हैं उनके कल गए हैं, उनको भी थोड़ा एडमिशन दिला दो. थर्ड डे कोई डिपार्टमेंट से आ जाता. फॉर एवरी टाइम ही हेल्प द पर्सन. ने कहा अनुज जी मेरी भी लिमिटेशन है, आई हैव ओनली 400 सीट. अगर 400 सीट मेरे ही नाम की वो सारे एडमिट कर लेंगे तो अपना गुजारा कैसे होगा. तो ये उनका स्टाफ था, स्टाफ को भी एडमिट किया अनुज जी ने. बट आई कैन नॉट टेल यू कि ही इज अ वेरी कोऑपरेटिव पर्सन. नॉट ओनली दिस साइड, in the institute also, whenever a member have any complaint or member ask Anuj ji ki this is the problem, generally he'll try to help him. जहाँ तक possible होगा मैटर को शॉर्ट आउट भी करेंगे. और आई कैन से कि परमात्मा उनको लंबी आयु दे. इन एडिशन टू दैट नव्या मल्होत्रा और जो सेकंड जो अपने स्पीकर आज के, ही इज फ्रॉम चंडीगढ़. Although he is not conversant with me, but Navya, he was a disciple to me. Although he was disciple, we attended GST classes collectively. So with the result, we completed the GST course, we completed the certification course, and I can assure you, Navya is also very helpful in the matter of GST. With all this thing, I thank our chairman, हमारे आज के जो चीफ गेस्ट हैं अनुज गोयल जी, नव्या मल्होत्रा जी, और चंडीगढ़ से जो हमारे स्पीकर आए हैं वो साहब. I don't remember your name, sir.
Amitoj Singh ji, and our honorable chairman of Northern India Regional Council, Young and Dynamic, Avinash Gupta ji.
अच्छा.
Thank you Vinod ji, thank you very much, thanks a lot.
Okay जी, okay, thank you.
Thank you, Vinod sir. Now I request our session chair Anuj Goyal sir for his keynote address on today's topic, taxation aspects in capital market.
Thank you, Kunal Sharma ji, who is contributing like anything in the Committee on Capital Markets and Investors Protection. We are having the presence of my younger brother, very dynamic leader of the profession from the northern part of the country, the chairman of Northern India Regional Council, C. Avinash Gupta ji, who is doing wonders for the cause of the profession, for the cause of the members, for the cause of the societies. I think we have to have the leaders like Avinash Gupta ji to lead the profession. So we are really fortunate to have the leaders like C. Avinash Gupta ji to chair the Northern India Regional Council, one of the most prominent regional council of the Institute of Chartered Accountants of India. And we are having our very prominent speakers, C. Amitoj Singh sir, our honorable ex-chairman of Chandigarh branch, and C. Navya Mallhotra ji, expert of GST, young and dynamic leader Navya ji, and Vinod Goyal sir, my elder brother, and who is contributing like anything for the cause of the society, for the cause of the members, and he is always helping each and every one. We are having CA Amit Agrawal ji, who is taking care of the research committee, and we are trying to do n number of things for the profession, for the nation, and the research committee. And since last year, I am having the responsibility of the research committee, and we have taken lot number of initiatives in the research committee also, whether that is ICAI International Research Award, whether that is ICAI Research Project Scheme, or Research Doctoral Scholarship Scheme. So we are trying our level best to see that how the Institute of Chartered Accountants of India can be at forefront in the research activities, how the best accounting professionals across the globe, the chartered accountants, can really contribute in the field of the research. And friends, we are very well aware because Avinash ji is the chartered accountant who is having keen interest as far as the research is concerned. Without research, no organization can really go ahead, can really progress, and particularly the education institution, and more particularly the statutory body like the Institute of Chartered Accountants of India, which is the second largest accounting body of the world, and which is producing the best accounting professionals across the globe. And when we do talk of the partner in nation building, I think through the research, the chartered accountants and ICAI can prove that we are real partner in nation building. So we are having this very important VCM organized by Committee on Capital Markets and Investors Protection. Fortunately, I am the chairman of the Committee on Capital Market and Investors Protection. Very important committee for the chartered accountants, for the profession, for the nation. And no professional can better understand the nitty-gritties of the capital market than a member of the Institute of Chartered Accountants of India. Avinash ji is helping us like anything. He has taken a lot number of initiatives in the capital market. And Amitosh ji, when we do take the best of the names in the capital market, you will find them the member of the Institute of Chartered Accountants of India. Where Avinash ji, when we do talk of the Rakesh Jhunjhunwala ji is the member of the Institute of Chartered Accountants of India. Recently, we were having CA Rudramurthy ji, who is a very prominent expert of the capital market. He is also, of course, the member of the Institute of Chartered Accountants of India, and more than 5,000 chartered accountants were live in that program also. And today also, we are having more than 4,000 chartered accountants live in this VCM. That shows our interest for the capital market. And I think the chartered accountants are supposed to come out of the traditional areas of the compliance, have to come out of the traditional areas of the attest function. I'm not telling that they should not do the compliance function. I'm not telling that they should not do the attest function. But और भी गम है जमाने में compliance or attestation के सिवाय for a chartered accountant. And capital market is such an important field. It is not only good for the chartered accountants, but is also very important for the trade and industry. And very important, if the chartered accountants will be there, it would be really good for the small investors, 135 crore people of the country. So I'm quite confident that the chartered accountants will certainly come forward and try to see that how we can contribute in this very important field of the capital market, not only for the profession, but also for the nation. And when we do talk about the taxation aspects in capital market, so capital market and taxation is very close to the heart of the chartered accountants, whether it is direct tax and now whether it is indirect tax, say GST. And when we do talk of the taxation aspects, then the eyes of the chartered accountants are wide open. So we can very well see that there are a lot number of issues in the taxation aspects in capital market, and we are having the best of the resource person, Amitosh ji, who will be taking care of the direct tax part, and CN Navya Malhotra ji, who will be taking of the GST part of the taxation aspects in capital market. And I think one of the most important aspects which needs to be understood by all the investors who are the part of the capital market is the taxation aspect. Friends has rightly remarked that the key to exponential growth is continuous learning. And Avinash ji is trying to see that how we can learn. Keeping that in mind, we at ICAI regularly strives to update and educate our esteemed members in enhancing their professional competency and growth through conducting various knowledge enriching webinars and VCMs on contemporary topics in the domain of capital market. Practically, Avinash ji is the architect of this program. He introduced both the speaker Amitosh ji and Navya ji, and I'm really grateful. He is contributing like anything for the cause of the profession, for the cause of the members. Friends, you must be aware that Committee on Capital Markets and Investors Protection of ICAI has been entrusted with various responsibilities like providing suggestions on various bills, regulations, notifications, circulars, and other documents relating to capital market for submission to the government regulator, initiating research studies in the field of capital market and investors protection, conducting training programs for members and others on matters relating to capital and commodity markets. You must be aware, Avinash ji, that we are having very, very important 2 certification courses. We launched, Vinod sir, 2 certification courses specifically for the members of the Middle East, specifically for the members of the Gulf countries, were launched by in the presence of the President and Vice President. And now we are further had the approval of the Council of 2 new certification courses. So 4 certification courses, very, very important certification courses for the chartered accountant, so that chartered accountants can update their skills, can enrich their skills, and in turn they can very well contribute for the cause of the investors, for the cause of the trade and industry. And friends, Committee on Capital Markets works in the area of promoting investors' protection by nurturing capacity and competency development of members and stakeholders in the capital market. A committee will be actively working in the area of financial literacy for the development of economies through various initiatives to educate and empower citizens. Committee also works to develop competitive workforce for capital market and corporate through its various learning initiatives like workshops and training programs on capital market. Conducts 2 flagship certificate courses, as I was already discussed, for professional development of members in the field of forex and treasury management and derivatives. Recently, I was just discussing with Avinash ji that one very, very important decision we have taken, that now Avinash ji, besides being in full-time practice, can very well have 10 crores income per annum from equity derivatives. So specifically, we have taken the decision keeping the Avinash sir in mind that he can very well be in practice on full-time basis, and he can very well have very, very good income from equity derivatives, and that income can be utilized for the cause of the members, for the cause of the society. So in the very first meeting of the Committee on Capital Markets, we have taken this decision, and I'm quite confident that the chartered accountants will certainly come forward and avail this opportunity, and will certainly try to see that how they can use their knowledge as they are the best accounting professionals across the globe to understand the nitty-gritties of the capital market. Friends, Benjamin Franklin, founding father of the United States, once said, there are only 2 things that are certain in life, death and taxes. So capital market is also not untouched from the impact of taxation. More so, it is strongly advisable to understand the impact of taxation on returns and other related costs while entering and exiting capital markets. Security transaction tax, capital gains tax, and DDT, dividend distribution tax, are the common taxes which impacts the transactions in capital market, and one have to be aware of them to make better investment decisions. But with the introduction of GST, it is important to understand that GST can also have implications on the investments due to various reasons, such as financial services companies have to pay slightly higher tax rate of 18%, which could affect mutual fund investors, insurance policy holders, and even depositors in form of increased total expenses ratio and other related costs. Further, one of the important area of capital market is derivative trading, trading in future and options, or F&O on stocks, currencies, and commodities, which has become a hot topic amongst investors. Unfortunately, most people have little knowledge about how these trades are taxed. Besides, several small traders who have losses from futures and options skip reporting them in their income tax return. It is important to note that reporting all your sources of income is mandatory. One may receive a notice from the tax department due to such non-compliance. Therefore, through today's VCM, our aim would be to throw some light on taxation aspects in capital market by covering intricate technicalities of implications of GST in capital market and tax effects of trading in F&O, a practical approach. Now, without taking your further time, as we are very, very eager to hear our learned guest speaker, C. Amitosh Singh ji and C. Navya Malhotra ji, to enlighten our knowledge and fine-tune our concepts with their experience and wisdom on today's VCM on taxation aspects in capital market. And I'm quite confident that the session will be very, very fruitful when we are having the person like C. Avinash Gupta ji, who is an expert of the direct taxes. I think this session is going to be very, very fruitful, very, very interactive. I will request all our viewers that they can send their queries. We are having the advanced queries also, and I will request all the members that they can very well send their queries so that we can have this session, very, very interactive session. So I will not be taking a further time as we are very, very eager to hear our honorable guest speaker, Amitoj and Navya. I will request all of you to please take very, very good care of yourself and your family members in this time of a pandemic corona. And as NIRC and other branches are trying their level best to have the vaccination for the chartered accountants and their family members, please get yourself and your family members vaccinated to fight against this pandemic corona in a very, very strong manner. I compliment Avinash ji for being very, very, I think, taken that lead to ensure that each and every chartered accountant in each and every part of northern region, particularly in Delhi, even a lot number of chartered accountants and their family members from Ghaziabad and Noida were also got vaccinated in the vaccination drive of the NIRC led by CA Gupta ji. And I think this will give our chartered accountants and family members a very, very strong, I think we can very well fight from against this pandemic corona in a very, very strong manner, and compliment to CA Gupta ji and the entire team. I will not be taking a further time as we are very, very eager to hear Amitoj ji and Navya ji. So I once again welcome all our honorable members. More than 4,000 chartered accountants are live with all of us. That shows their dedication, devotion, and interest in this very, very important topic for the profession, the taxes and aspects in capital markets. Thank you very much, friends. Over to Kunal Sharma ji.
Thank you, sir. You have set the right expectations about the topic of today. And with this, I request Amitoj Singh sir to start his presentation. So, to you, Amitoj sir.
Right. Thanks a lot, Kunalji. Thanks a lot. First of all, I would like to extend my heartiest thanks to CA Anuj Goyalji, Central Council member and the chairman of Committee on Capital Market and Investors Protection, along with the CA Avinash Gupta ji, our NIRC chairman, who took this initiative to have this topics discussion today relating to the tax effects of trading in F&O. And I also welcome my co-speaker, CA Navya Malhotra, as rightly said by Avinash bhai, that the young and dynamic and charming personality who will be speaking and taking care on the GST aspect relating to this F&O and capital market. And also welcome all our esteemed members who are here today on Sunday afternoon with us for this deliberation. First of all, I would like to thank Anu sir on one more thing which he categorically conveyed with respect to Avinash bhai, that they have allowed F&O transactions, derivative transactions to be done by the chartered accountants. I think last year there was a lot of hue and cry ki bhai, why we have been not stopped to do all this transaction. But thanks to him, in the very first meeting, as he conveyed that in the very first meeting of this committee, they took this decision. And I think members like Avinash bhai, I can see his charming face now, that he is ready to invest and earn the maximum which he can do. And definitely, as Anuj bhai have said, that he is going to support the members in this part. So once again, very thanks to that part. So moving to this part only, definitely the topic which has been chosen is in relation to that only, that how, what are the tax effects relating to F&O, and what we all have felt since the past 1 year post-COVID. If we say post-COVID, we all have seen that lot of our members also, not only our members, but overall, if we see the bracket of traders as well as investors who have entered the stock exchange, have exponentially grown, exponentially. This we all have felt. The way the stock market have gone down to 7,500 mark, and then now it is standing close to 16,000 marks, speaks about the money volume which has been infused in the stock market, right? So, but along with this, because there are so many newcomers who are coming in, even if I am from Chandigarh, so I can share my thoughts here, that most of our members, young chartereds who have just recently passed out and are well aware about the I will say the provisions or the nomenclature of what the options or what the futures are. So they all get interested in this market, right? Because definitely the amount of money which may get involved in the options is less, and they can generate enough money for them. So this is one of the new conventional type of entrepreneurship which one can take up. And definitely, if we take up, then definitely there are integrities with respect to taxation also. So today's deliberation is specifically on the future and option. So I'm just sharing my presentation before I commence my deliberation. So I hope participants can now see my application. So our today's topic, which Navya Bhai and me will be taking up, will be with respect to the tax effects which are related to trading of F&O, future and options, in stock market. Now we all have been doing, I think most of us, the moment we start our jobs, or we are into our practice, or we start our entrepreneurship, we start investing, maybe in the real estate, maybe in the stock market, maybe somewhere else also. But along with that, we have to understand the tax implications which are involved there. Now, when we talk about the future and options, definitely there are certain things which come across our minds, which are related to sometimes when at the time of the filing of the return, the client comes over and he shares that ki bhai sab mera to F&O mein loss ho gaya ya profit ho gaya, what to do? Dikhana hai, nahi dikhana hai, what to do, right? And as rightly Anuj bhai have said that we have to, the way there is a transformation in the income tax interface, that the way the data has been is being collected by the government of India, we all have to ensure now that we start declaring whatever we have earned or we have not earned. But if we have entered into any kind of financial transaction, it's better that we declare in our income tax returns. The reform which is coming in 26 years down the line, all these transactions are being reported regularly, and most of the clients, they don't take care of, and later on we find that they get the notices under section 148 or 143 too, and then we have to just give the submission that why they haven't declared. So it's better that if we declare earlier rather than later. So I always say that precaution is better than cure, right? So one of the topics, although Avinash bhai have said ki we might take capital gains as well as day trading part also, but my main focus firstly will be on the F&O part. So few of the questions which comes in our mind the moment we look at the future and options transactions undertaken by our client or ourselves is whether an F&O is a speculative transaction or it is not a non-speculation transaction. Secondly, how I am going to tax it, whether it's a business income or it's a capital gain income. Thirdly, if there are some losses happening in my F&O transactions year after year, whether I can set off those losses against the other incomes, or if I am not able to set off those losses against the other incomes, can I carry forward those losses to the future assessment years? And if so, for how many years I can take that? So these are the few of the things which come over when we think about F&O. Any other points which will come across, definitely we've shared all the queries, we will try to solve it. So if I look at the income tax provisions, I will say that there is nothing specifically which has been touched upon when we talk about how the taxability of derivatives has to be taken care of. But there are some specific sections which we have to read through before we decide how the taxability of that section of this F&O transaction will happen. Along with that, we have a guidance note with respect to our tax audits, which tells us how the turnover part has to be calculated, and we will try to understand and read through, and through one example, we will try to understand how that turnover has to also be read through. So primarily the sections which we have to keep in our mind when we talk about F&O transactions, they are primarily the explanation relating with section 28, section 73, which section 28 is the charging section of profit and gains of business and profession. Section 73, which speaks about the set off and carry forward of losses relating to speculative transactions. And section 43.5, which is also related section related to PGBP, profit and gains from business and profession, and which will be speaking about what speculation exactly means. So we all know what is an F&O generally, but still I'm just going through the definition. We all know derivative is what? It is a derivative is basically an instrument which basically derives a value from some underlying asset. It doesn't have its own asset. And the most popular form of derivatives are future and options. And we all are aware that future and options happen both in stocks as well as index as well as commodities, right? So आज की डेट में हम देखें तो हमारे पास निफ्टी इंडेक्स है, हमारे पास बैंक निफ्टी इंडेक्स है, हमारे पास ऑप्शंस अवेलेबल हैं बैंक निफ्टी की, अपना निफ्टी की, एंड वी हैव द फ्यूचर्स एंड ऑप्शंस ऑफ ऑल द वेरियस स्टॉक्स, वेदर वी टॉक अबाउट रिलायंस, आईटी, इन्फोसिस, as well as commodities also, where we talk about metal, we talk about steel. So in सब में ही हम futures and options में खेलते हैं. We all trade through some of the brokers, and future contract, we all are aware what it is. It basically speaks about agreement to buy or sell on a future date. So आज जो मैंने चीज नहीं लेनी, मैंने आज से एक महीने बाद, after 1 month, I want to purchase something, and I decide today only at what preset date I will purchase this for what amount, right? So on the expiry, futures are executed by delivering of the underlying assets. On the other side, when we talk about the options, in the options, although they are very much similar to futures also, but when we do options, you can choose not to make the transaction. So basically on the premium part, we basically execute the things. But when we talk about futures, I talk about Nifty index futures. So when I talk about Nifty index future, or I talk about Reliance future, so what is happening is the moment I enter into a Reliance future, I purchase a Reliance future. So what is happening is I'm paying a certain amount, which we generally call it as a premium, right? So I pay a certain amount, and every day mark to market, whatever profit or loss is there, that has to be executed that similar day. But when I talk about the options, I have the choice that I don't have to close it, or the plus or the minus which happens during that day, उसका मेरे बैंक के साथ कोई लेना देना नहीं होगा. There won't be any effect on my bank. But when I talk about futures, definitely in the futures, if I have taken a Reliance for rupees, say a few Reliance futures, say for a premium of 500 rupees, and by day end it falls down to 400. So 100 rupees multiplied by the number of lots which I have purchased, that amount will be deducted from my bank account. Next day, if it rises to 450 rupees, that 50 rupees will come back to my bank account. So every day, the impact of mark to market margin happens in futures. But when I talk about options, I can carry forward them to a particular day. So there won't be any effect on my bank account at the end of the day. Further, we all are aware, future and option generally, they have a weekly expiry as well as monthly expiry, and we can transact them for 3 consecutive months, right? So that is what is there. So now when I talk about F&O, now what is the treatment basically which we have to see when I do a F&O transaction? So generally all those people who are doing a F&O transaction, what they're doing is they are purchasing a Nifty index or writing off. So there is an option where we have calls and we have puts. So we can buy a call, we can buy a put, or we can just sell also. So there is a possibility where I can sell a call or I can sell a put, which we generally call it as writing. So they write off those calls or puts. So they are selling those calls or puts. And then at a later stage, they either purchase it or it gets nullified on the expiry date. So we have to understand what exactly is happening in F&O and how I have to tax it. So first of all, though, I have the presentations which I generally get from, I have all the kind of statements which I get from my brokers, which just tell me how much profit or how much loss I have earned. So what will be the treatment of that profit and loss in my Income Tax Act? That I have to understand. So first of all, though, I have to see whether it will amount to speculation or non-speculation. Now, what is generally a speculation? If I talk about what generally speculation is, something which is I'm speculating for a future time period. So if I talk about speculation from the income tax perspective, section 43.5 defines it, and it says that speculation transaction means a transaction in which a contract for the purchase or sale of any commodity, including stock and shares, is periodically or ultimately settled otherwise than by the actual delivery. So when I talk about futures and options, I took the futures of Reliance, I took the option of Reliance. I don't have any Reliance shares in my demat account, but still I can transact in those futures and options which are relating to Reliance shares. So I am entering into a contract which will end of the day periodically. That means after a month or 2 months or 3 months, or ultimately whenever it has to settle, that is the expiry date, it will settle otherwise than by the actual delivery. So even if I have took the futures for, say, as of today, Reliance is at 2,000 rupees. So I took a future date, I took it next August. On 27th August, there is an expiry. So I took a future of, say, 2,200 for that August expiry. आज की value 2,000 rupees है. So on that day, whether it is on 2,200, whether it comes up to 1,900, or whether it goes to 2,500, I am basically paying the difference rather than the actual delivery, because I am not holding any shares with respect to Reliance. So in that case, they say if this is happening, then it is a speculative transaction. So that means what? That means what? If I think about F&O at the very outset, by reading this definition of speculative transaction, which has been defined under section 43(5), so it says that it's a speculative transaction. However, there is a proviso attached to it. That proviso speaks about what? So I am touching upon the D part of that proviso, which says that an eligible transaction in respect of trading in derivatives carried out in a recognized stock exchange, or an eligible transaction in respect of trading in commodity derivatives, and that also is carried out in a recognized association, that shall not be deemed to be a speculative transaction. So that means what? The Income Tax Act have very categorically taken out both the tradings which are related to the derivatives, which include the stock or the index derivatives, as well as the commodity derivatives. They say those both will not be called as a speculative transaction. But why? What impact there will be, that we are going to understand. But that means what? At the outset, they say that both these transactions will not fall within the definition of speculative transaction. But to make them eligible, I have to just understand two aspects. One is eligible transaction. Second is recognized stock exchange. So if the transaction which I have entered into is an eligible transaction, secondly, it happened on a recognized stock exchange, only and only then it will be a non-speculative transaction. Otherwise, it will fall under the definition of speculative transaction. Because in the case of the F&O, I am not settling anything with delivery. I am not settling anything with the delivery. So now, what is an eligible transaction? Very clearly, they have said that it's that transaction which has been carried out electronically on a screen-based system through a stockbroker or sub-broker or such other intermediary registered under Section 12 of the CPE Act, and which is supported by a time-stamped contract note issued by such stockbrokers or sub-brokers or such other intermediary to every client, indicating in the contract note the unique client identity number allotted under any act. So we all these days, if I talk about F&O, we are all those people, all those members who are entering into F&O transactions, all our clients who are entering into F&O transactions, generally they are associated with some broker. All their transactions are happening on a screen-based electronic systems. Secondly, they all are getting contract notes end of the day in their mailbox. So if I talk about, if this is happening, they are taking the first part. So they qualify within the definition of eligible transaction. What is an eligible transaction? Now, have that eligible transaction happened on a recognized stock exchange? Now, which is a recognized stock exchange? That also the Income Tax Act have defined. They say it's that recognized stock exchange as referred to in clause F of section 2 of the Securities Contract Regulation Act 1956. So any stock exchange which is not a recognized stock exchange, I talk about Delhi Stock Exchange, I talk about Ludhiana Stock Exchange, I talk about Kolkata Stock Exchange, or National Stock Exchange, or Bombay Stock Exchange. So only and only those stock exchanges which are being recognized under this act, and I am entering into a transaction on these stock exchanges only and only then my transactions with respect to F&O will be called as non-speculative transactions. Non-speculative transactions. Now, the moment it happens a non-speculative transaction, it means what? There is a possibility that I must have entered into numerous transactions, whether they will fall within the business head or the capital gains head. That also one part I will discuss at the very end of my presentation, because I form opinion that there is a possibility that I can shift my F&O into capital gains also. So that one thought which comes into my mind, I will try to share with you all also. Now, so if transactions are happening, so there is a possibility that there can be a tax audit also under the Income Tax Act. Now, if we go through the 44AB revision, so we are just revising through our section 44AB. At the outset, it is not directly linking it with F&O, but first of all, let's understand कि 44AB कैसे लगता है. So, being a non-speculative transaction, it becomes a normal business. So the best benefit to a non-speculative business is what? That any losses or gains which are happening in the non-speculative businesses, they can be set off or carry forward among each other. So that's the major benefit which any non-speculative business gets in. So I into an F&O trading, I am into other businesses also. So now I am very much clear from my part that F&O trading is a non-speculative business. So now if it is a non-speculative business and its income is going to be taxed under section 28 of the Income Tax Act, then first of all, let's see whether any tax audit will be applicable to me or not. तो टैक्स ऑडिट के लिए टर्नओवर भी देखना होगा, तो टर्नओवर को आप बाद में समझेंगे, पहले आप समझते हैं व्हेन टैक्स ऑडिट इज एप्लीकेबल. Now, in case of profits from transaction of end of F&O trading, if I am into F&O trading, we all know that tax audit is applicable. 44AB says if the turnover from such trading exceeds 1 crore. So my F&O turnover is, if it is more than 1 CR, then the tax audit will be applicable on me. First part. Secondly, now if I want to avoid that tax audit, so even if my turnover is exceeding 1 CR, but it is less than 2 CR, I can show a profit of 8% or 6%. And in this case, we can show 6% because almost all our trades digital only. Digital means every trade, purchase or sale is happening through a banking channel and not through a cash. So in that case, section 44AB of the Income Tax Act have given us a benefit by reducing the presumptive rate from 8% to 6%. So if I have a F&O turnover of close to 2 CR, then if I don't want to get the tax audit done, what I can do is I can show my profit at 8% on the amount of turnover, which will be calculated under this act. Now, tax audit under section 44AB, and if we read with section 44AD, what we have tried to understand, then it says that if the net profit from such transaction is less than 8% of the turnover from such transactions, then I have to declare the tax audit, right? So if I say कि although my turnover is more than 1 CR or it is less than 2 CR, say my turnover is 2 CR, but I don't want to declare 8%. 8% means what? 2 crore ke upar, it becomes 16 lakhs. So I don't want to declare 16 lakhs. I say I have earned only 2 lakhs, or I even haven't earned anything. It's a loss. Then you have to get the tax audit if you want to declare it less than 8% or 6%, whatever rate is applicable on you. Further, we have to remember that any turnover where the turnover increases 2 crores, then in that case, tax audit has to happen. So there is nothing like 44AD, then we have to read through, then we have to try and understand that we have to have the audit. Although this 2 CR has now been increased to 5 CR. In case of the loss, again, the taxability will be there, provided that if there is a loss and we have a total income greater than the basic exemption limit, then definitely that tax audit will be required. Otherwise, it won't be required. So summarizing the things, if your trading turnover is more than 2 crores, tax audit is mandatory. If your trading turnover is between 1 CR to 2 CR, tax audit is required if you are not opting for the presumptive scheme. And if your trading turnover is less than 1 CR, tax audit is not required. However, if you are under losses or your income is less than 8% of the turnover and your total income is greater than the basic exemption limit, then you wish to claim such low profit, then please, we have to get the tax audits done. As a chartered accountant, as a practicing chartered accountant, I must be aware when the tax audit is applicable and when not the tax audit is applicable. Because if I start filling the turnover figures or as the turnover figures or the amount of transactions which have been entered by my client or myself, they are being duly reflected or the information is being passed by the exchanges to the government of India, the FIU unit of the government of India. Tomorrow we will be getting the notices if we don't get the audits done. If the turnover as per them is crossing this limit of crores, then definitely they can issue notices to the clients or to us that why the tax audit has not been done. So on the better side, on the precautionary side, it's always advisable that if they have entered into a transaction and we understand how the turnover has to be calculated, then definitely if it is crossing the limits, please do get the tax audit done. Now, to get the tax audit done, I have to see the turnover because 1 CR का वहां पे bracket मेरे पास stand कर रहा है. Now, for that purpose, always there is a lot of confusion because the amount of contract note which comes over to me, it's a very big thing. Or the end of the day, net settlement, when I see, when I trade every day, and another day I see a net settlement and I see a huge amount of crores in my net settlement. But is that the amount which will qualify as a turnover when I talk about the taxation purposes? Or is there something else which has to be seen? Because if I go by the layman language, then definitely looking at one-day transaction which is happening in an F&O, I will have my tax audit done on the very first day of my trading. But this is not what the law have intended. And thus there has been a guidance note as far as determination of turnover in case of F&O is required to be calculated. Because definitely the turnover becomes one of the most important factors for every individual for their income tax purposes. Now, 4 parameters which we have to just figure out, or I will say 3 parameters which we have to touch upon when we talk about the turnover. Firstly, it says the total of positive and negative of favorable and unfavorable differences shall be taken as turnover. Every day, I am purchasing Reliance futures, I am purchasing Infosys futures, I am purchasing Tata Motors futures. Now, whatever have happened in these 3 futures, Reliance, Infosys, and Tata, whatever have happened, whether I have earned profit or whether I have earned loss, they say take the total of both positive and negative. So even if I have earned profit in one and lost in another, I have to total both the amounts. So that negative sign I have to ignore for the turnover purposes. It is not affecting my profit or loss. My profit or loss is profit minus loss only. But when I talk about turnover, then they say you take the total of both positives and negatives of favorable and unfavorable differences. So whether the transaction has been favorable to me or the transaction has been unfavorable to me. So whatever the amount of profit or gain loss has been there, I have to total that. So this is the first. Again, very important. Premium received on sale of option is to be included in the turnover. As I have told you, and we all believe, I think, who are the experts of stock market, the expert traders who are there, they all know that the game of F&O is all about call or put writers. जो ये call writers and put writers बैठे हुए हैं, the game is all about them. The whole market's ups and downs depends on them. So who are they? They are the ones who keep selling the calls and puts at various levels. Now, what they are doing it by what they are exactly doing it through that way. So they are doing what? They are eating the premiums. They are eating the premiums. So if we have seen the stock market, what exactly is happening in the stock market? Today is Sunday. My next expiry stands on Thursday. Say I go by the index. Support how to calculate the premium amount. Say as of today, my Nifty is at 15,500. And the premium of 16,000 call stands at 800 rupees. 300 rupees. I'm just taking an example. Today, the market closed at 15,500. Today, the market closed at 15,500. And next week's expiry, 16,000 call premium is available at 300. Now, I am a trader. I am a writer. I see my Nifty lot is of 75. I see 300 rupees multiplied by 75, approximately 21,000 rupees premium is standing in one lot. So I do what? I give margin to my broker and sell that call of 16,000 rupees of next expiry. And what happens? That premium comes over to me. वो 2100 मेरे बैंक अकाउंट में ट्रांसफर हो जाएंगे. Now I will wait till the next expiry, that is Thursday expiry. If the Nifty doesn't cross 16,000 rupees, that 21,000 rupees is mine now. Because if it crosses, only and only then I will have to pay, otherwise I won't have to pay. So when we talk about call writers or put writers, they have limited gains but unlimited losses. So they are the ones who are running, but their chances of winning the battle are 2/3 as compared to the buyers. So the industry, the institute, the experts understand that this way also a lot of money is brought into my bank account. So the law said, while determining the determination of turnover, all these premium receipts received on sale of such option has to be included in my turnover. In respect of any reverse trades are entered, the difference thereupon also shall form part of the turnover. Third point, right? So if I say I have taken the call, or I have purchased the Reliance futures, and just to correspond it, I also sell the Reliance futures. So that's the reverse trade. So if that reverse trade is also happening and I'm settling down those reverse trades down the line, then also the positive and negative has to be taken. So what I have to keep back of the mind when I talk about determination of turnover, two aspects I have to see in. Firstly, any futures, any options, whatever trade I am taking up, in that trade, whether I earn profit or whether I earn loss, I'm not looking at the volume. I'm not looking at the volume. Say Reliance lot is of 200. One lot of Reliance future, one lot of Reliance option is of 200 shares, 200 units. And the premium is say 500 rupees. So 200 into 500 is the amount of premium which I am paying. I'm not looking at the figure of 200 multiplied by 2000, the current value of that Reliance. So that is not the turnover which I have to see. I just have to see the difference of my purchase and sale, whether it is profit or whether it is lot, I have to total it. Plus all the writing which I have done, whether respect to calls, whether it is with respect to puts, all that premium which has been received by me, that will also get merged into my turnover calculation, right? So when we talk about derivative transactions, we have to understand we only enter the differential amounts in our books and not the actual turnover, because otherwise the actual turnover is going to be tremendous. It is going to cross maybe billions also, but we don't have to do that, but we have to only and only take the differential amounts, right? So it doesn't make any difference whether the difference is positive or negative. I have to just aggregate all of them. So I'm taking one example of futures, calculation of turnover of futures, right? So for every trade, we all know. So we have to just ensure these days everything is very digitized. So there is nothing to be worried about कि contract notes नहीं है हमारे पास P&L transactions available नहीं है, because these days all the brokers, they have a very good technology behind them, and every day by just the app we are able to download all the contract notes, although they are mailed to our mailbox also. So we have to just evaluate that. So for every trade, contract notes are issued which shows the value of futures bought or sold, while for the recording purpose only the difference between them has to be used. So let's take an example. RK bought one lot of RAK Foundation at 2 lakh rupees and sold it for 2.8 lakhs. So the amount is quite big, but the profit is only 80,000. When even for that one lot, he haven't paid 2 lakh rupees, say. So maybe that's the share value. He might have given a premium of less amount and sold it for 2.8 lakh. So there is a profit of 80,000 rupees. He purchases another lot of RAK Inc. in which he have purchased it for 3.5 lakhs and sold it for 3 lakhs. There is a loss of 50,000 rupees. So my net gain is only 30,000 rupees. But when I have to see the turnover, now why I have to see the turnover? I have to see the turnover for the tax audit purposes. So the hierarchy goes what? Whether my client is bound to get the tax audit, I have to see the turnover. So till the time I don't see the turnover, I don't get the figure of the turnover, then I cannot find the figure of, then I cannot decide whether my client will have a tax audit or not. So in this example, if I see 80 plus 50, 1.3 lakhs will be my turnover. Although my profit is only 30,000 rupees, but for the determination of turnover, it will be classified as 1.30 lakhs. Now, again, if I talk about options also, in options, we have this call options and put options, and we have the right to sell also. So in this case, if I talk about, now AZ bought one lot of Nifty options, 60,000 rupees at 1,000 premium per lot. So Nifty options 16,000 के लिए मैंने एक lot purchase कर लिया for 1,000 rupees. So that one lot included 75 units. So I have paid 75,000. So in next few days, the market booms. So my premium grows from 1,000 rupees to 2,000 rupees. Now at 2,000 level, I sell that Nifty option. So I sold it for 1,50,000. So the net gain is 75,000. Now another thing, Bank Nifty, I sell. So I am not purchasing it, but I am selling it. So I look at the Bank Nifty call option of 35,000. Today it is on 32,000, say. So I believe that by next expiry, it won't go till 35,000. So I do what? I sell it. So I have 4 lots. One lot is 1,000 rupees premium. So I receive premium of rupees 4,000 rupees on writing an option. Thus, the total turnover which will be out there will be 75,000 rupees plus 4,000 rupees, 79,000 rupees. So even on the premium which I have received on writing an option, it will be added into my turnover. So this is how I calculate my turnover. Now, I have calculated my turnover and say it comes out to be 1.5 CR, 1 CR, 1.5 CR, 2 CR. Now, should I go for 44 AD or not? That is one thing which I have to think over. being a practitioner, I have to see whether my client is interested in getting the tax audit done or not. If he says no, I don't want to get the tax audit, but I am ready to declare under section 44 AD, will that be applicable on me? I have to see. So section 44 AB definitely provides that if the turnover of gross receipt exceeds 1 crore, then he is liable to get his books of accounts audited under the Income Tax Act. However, the first preview of section 44 AB says that it will not be applicable in case the person declares PNG from business as per provisions of section 44 AD1. So that's the presumptive profitability which I am going to declare. Now, I find out that out of that 1.5 CR, or say my as a client had a turnover of 2 CR after doing all the plus and minus, and I figure out that he have earned 30 lakh rupees profit out of this F&O transactions. So should I go for 44 AD? So when I look at 2 CR, I multiply it by 6%, and I find that it becomes 12% or 12 lakh rupees. 6 multiplied by 2 CR. So it comes out to be 12 lakh rupees. And I go through the various statements of my client, और उसमें देखता हूं कि भाई साहब आपने कितना प्रॉफिट अर्न किया है, and he says कि भाई I have earned 30 lakh rupees. So I can advise him that it's better that you declare a presumptive income under section 44 AD rather than declaring the actual profits. So section 44 AD, we all know how it can be applicable to me. It says that it starts with the non-abstention clause with regards to section 28 and 43C, कि उनको बाहर करते हुए provides that a sum equal to 8% of the turnover, 8 or 6%, or a sum higher than 8% claimed to have been earned by the eligible assessee shall be deemed to be the profit and gains of such business and chargeable under the head PGBP. Now, explanation. In this respect, one aspect we have to see, the way I've given the example, that in actual he have earned 30%, 30 lakh rupees. But when I talk about the presumptive taxation, then his taxability may come down, then his profitability may come down to only 12 lakh rupees, because 2 CR multiplied by 6%, it's only 12 CR. But in actual, I have earned 30 lakh rupees. Can I do it? Or will my capital be limited only to 12 lakh rupees? Or I can say that my capital is 30 lakh rupees because that's the profit which I have earned, and my profit gets added to my capital. My capital is 30 lakh rupees. But when it comes to income tax purposes, the profits which will be taxable, that will be only to the extent of 12 lakh rupees. So can the assessing officer tax that difference of 18 lakh rupees? Because he says that you haven't paid tax on that. So let's understand. There are 1 or 2 examples, case laws, which I am putting up here. Section 43(5) defines speculation transaction and specifically excludes derivative transaction from the definition of speculative transaction. Combined reading, that is very much clear. Combined reading of section 28 and section 43(5) provides that derivative transaction will be treated as business and profit or loss will be taxable as business income only. Now, in this one case, which we had at our Chandigarh bench, Honorable ITAT held that asking the assessee to prove to the satisfaction of the assessing officer the expenditure to the extent of 90%, 92% of gross receipt would also defeat the purpose of presumptive taxation as provided under section 44 AD of the Act or other such provisions. So that means what? If I am declaring a presumptive income, my expenditure also has to be presumed that it has happened to the extent of 92%. And I don't have to justify it. I don't have to justify it. Thus, the AO cannot tax that extra amount, because when he calls upon my bank statement, he issues the notice to me, he calls upon my bank statement, and then that bank statement at the end of the day, on 31st March, he says there is a bank balance of more than 12 lakhs. It may touch upon 30 lakhs. And he calls upon me and he asks me why your bank balance is on the higher side. but the profits which you have declared in your return, they are on the lower side. Thus, that means you have earned something else. That extra amount I'm going to tax under section 69, the deeming provisions. This judgment says no, because that 30 lakh profit also has been declared from my share trading only, from my F&O transactions only. But because I have the right to declare it under presumptive income, thus I declared only 8% or 6%. And I am not bound to explain कि वो बाकी का पैसा मेरा कहाँ गया. I can keep it in my bank and my AO cannot tax it, right? So this is what this judgment says. The concluding part, since the scheme of presumptive taxation has been formed in order to avoid the long drawn process of assessment in case of small traders, on case of those businesses where the income are almost of static quantum of all the businesses, the AO could have made the addition under section 69 once he had carved out the case out of the glitches of the provisions of section 44 AD. So, but that only and only if it takes him out. Thus, he cannot go ahead and say ki I am going to tax that extra amount. Now, there is another judgment which speaks about this. They say that the choice available with the assessee of choosing the option has been taken away, and now the assessee is required to declare the income, whichever is higher, out of estimated income or the amount claimed to have been actually earned from such vehicle. This was with respect to 44 AE. This was with respect to 44 AE. And this is in line with the circular number 5/2010, which specifically spoke. Further, an anti-avoidance clause is provided to state that a prescribed fixed sum or a sum higher than the aforesaid sum. If we remember, वहाँ पे हमारी एक value थी, say 4,000 rupees, 7,500 rupees per truck हम declare करेंगे, or a sum higher than the aforesaid sum, that sum claimed to have been earned by the assessee shall be deemed to be profit and gains of such business. Because of this circular, this judgment by the Honorable ITAT Delhi bench said that the assessee doesn't have a choice. So the case which I took, I have earned 30 lakh rupees actually, but as per presumptive provisions, my profitability comes down to only 12 lakh rupees. Can I do that? If I read through this judgment, they says you cannot do that. But this judgment was with respect to 44 AE, and in this judgment, this was the circular on the basis of which they made the decision in the favor of the revenue. But such clarification, such circular does not exist for section 44 AD. That's why I am saying in 44 AD, we have the right to declare at the lower income, even if there is a higher taxability, profitability in the hands of the assessee. So when we talk about section 44 AD, yes, section 44 AD is very much applicable to the F&O transactions. If your total turnover is less than the prescribed sum in 44 AD, then in that case, you can declare 8% or 6% and declare the presumptive income. Right? So even if my purchase, I take an example, my purchase value of a lot as per contract note is 14 CR and sale value of a lot as per contract note is 15 CR. So I purchased it for 14 CR, sold it for 15 CR. The net favorable difference is 1 CR, and this will be regarded as a turnover for the purpose of section 44 AB. And the same will be accounted as sales in my books of accounts. Now, as per provisions of section 44 AD, it is at my option whether to go for 8% on this amount or the 1 CR, because in this my profit is 1 CR. In this my profit is 1 CR. So do I have the option? I say yes, we have the option. If so, we can declare the profit at 8%. Then there will be the addition to the actual profit. So it may be possible that AO add the differential amount as unexplained investment under section 69C. However, there is a decision of Chandigarh ITAT which I have discussed in which this addition was deleted. So, or even if I have earned 1 CR and I declare a profit of only say on 8%, which may limit it down to 10 lakh or 20 lakhs. So that difference of 80 lakh rupees, they may tax in my hands. This is what I am trying to say. But definitely, if I look at the judgment and if I look at the provisions of the law, they cannot tax it under section 69C because that's not an unexplained investment in my case. That has been duly recorded in the books of account. Thus, 69C will not be applicable in my hand because 69C is applicable when it is out of the books of the accounts. So the moment I go into the tax audit bracket, 44AA also has to be seen, and 44AA will also get applicable in my case. So the moment tax audit gets applicable on me, I have to see that. Now, important aspect which you have to see is the carry forward and set off all losses from F&O transactions. Now, as discussed, I told you the main reason behind bifurcating a speculative transaction and a non-speculative transaction is what? Basically the carry forward and set off of losses. Because when I talk about speculative business, section 73 comes into play. Section 73 limits the applicability of carry forward and set off of losses with respect to speculative business with other businesses or other heads of income. So I have to find out that can I take the transaction out of speculative business? And in our case, in F&O transactions, very categorically under section 43(5), the department, the Income Tax Act have excluded these F&O transactions. But still we are reading this section 73 for a specific reason. Now, section 73 starts with, before I come over to that issue which is up there, let's read through this act and understand this section and understand what it says. Now, any loss computed in respect of a speculation business. F&O is not a speculative business, but even if then we are reading this section, carried on by the cessee shall not be set off except against profit and gains, if any, of another speculation business. So what they say under section 73, subsection 1, profit from loss from speculative business, can only be set off against profit from another speculative business. मैं दो सट्टेबाजियां कर रहा हूं, हॉर्स ट्रेडिंग की भी स्पेकुलेशन कर रहा हूं और यहां पे भी स्पेकुलेशन कर रहा हूं. यहां पे लेट्स टेक वन मोर थिंग which although it's not related to F&O but it is relating to the shares. I do day trading. Not in F&O but in shares. I have a corpus of 1 CR. And I am a good chart reader as well as a technical analyst. I see the momentum building and I purchase the shares of X company for 1,000 rupees. I have a good corpus, so I purchased 10,000 shares of 1,000 rupees each. And during the day itself, it gives the return of 5% to me. वो जो 1,000 रुपए के शेयर्स हैं 5% उसमें डल जाता है. That means what? 50 rupees. So that share closes at 1050. Before it closes at 3:30 p.m., I sell those shares. That's day trading. And day trading is a speculation business. F&O transactions is not a speculative business. Same day, I do a F&O transaction, I do a share transaction. Same day, I close those transactions by day end. My F&O transaction will be classified as a non-speculative transaction my day trading transaction will classify as a speculative transaction. I am talking about day trading only and only with respect to shares and not with respect to F&O. My day trading in an F&O still will be a non-speculative business. Now my day trading business से डे ट्रेडिंग जो मैं शेयर्स की करता हूं उससे मुझे लॉस हो गया, can I set off it against my F&O profit? No, because it's a non-speculative business. Because 73(1) says what? Speculative business loss can only be adjusted against another speculative business. So that means what? If I have some another speculative business, so I am into horse trading, तो मैं हॉर्स ट्रेडिंग पे गैम्बल कर रहा हूँ, उस पे कर रहा हूँ, तो उस पे अगर मुझे प्रॉफिट होता है तो दैट मे विल बी क्वालिफाइड एज स्पेकुलेटिव बिजनेस, तो उसके केस में उसमें एडजस्ट कर पाऊंगा. Now if during the same year I am not able to do it, then what can I carry forward? What it says, where for any assessment year any loss computed in respect of a speculation business has not been wholly set off under subsection 1, so much of the loss as is not so set off, or the whole loss where the assessee has no income from any other speculative business, shall, subject to the provisions of this act, be carried forward to the following assessment year. So yes, speculative business ka loss, if I am not able to set off during that very current year, I can set off in the subsequent year. Now in the subsequent year, for how many years I can set off, and against which kind of income I can set off? It says it shall be set off against the PGPP, if any, only and only out of speculation business. And for any reason, if next year also there is no speculative business income, then again I have to carry it forward. But it can be carried forward only for 4 assessment years. So my loss from speculative business can only be carried forward for 4 assessment years. And what is my speculative business? Day trading in shares. Day trading in shares. Specifically in shares, no F&Os. My F&Os are non-speculative business as per section 43(5). But as per section 43(5), my day trading in shares is a speculative business. So my speculative business loss can only be set off against my speculative business income. And for a reason in current year, if I am not able to set off, then I can carry it forward for 4 maximum years. So what's the loss here? क्योंकि अगर ये मेरा non-speculative income होता, if it has been a non-speculative income, then I had the right to adjust it against any other business income. I have a business of trading. I have a business of distributorship of goods. In that I am earning profit. Can I set off my F&O loss with that business? As per the provisions of the law, yes. As per the provisions of the law, yes, I can set off. Firstly, so that means what? I can set it off against other income. Secondly, if I am not able to set off during the relevant year, then I can carry it forward. And for how many years? 8 years. 8 years. So primarily there are 2 major differences when I talk about speculative and non-speculative carry forward and set off of losses. In speculative, my loss can only be set off against speculative income. In non-speculative, I can set off that loss against any other business income. Second, if I am not able to set off, I can carry it forward for 4 assessment years. Herein, I can carry it forward for 8 assessment years. So that's the difference when I talk about speculative and when I talk about non-speculative business. And we have to keep it in my mind. Day trading in shares is a speculative business. F&O transactions is a non-speculative business. But now this explanation becomes important for us, because this explanation also explains what is a speculation business. अभी हमने 43.5 में पढ़ा कि what is a speculative business. Now here again under this section 73 there is this explanation which speaks about what will qualify as a speculative business. So that means what? Contradicting two different provisions when we talk about. Contradicting two different provisions. And this provision being relating to carry forward and set off of losses. So set off of loss means in that current year itself, it is going to impact you. But if before we read this, let's read the first line itself. It says, any part of the business of a company. So कहने का मतलब क्या है कि ये जो explanation speculative business की definition के बारे में बात कर रहा है, it is only and only talking about company as a assessee, nobody else. When I talk about 43.5, therein anybody doing any kind of business, whether any person, we have 7 classifications under section 231 which explains about business assessee. Any assessee, maybe not limited to company. So when they do business under section 43.5, if they are doing a F&O business, they are a non-speculative business. But when I come here and read through first part which I am reading through, it says where any part of the business of a company other than. So under the company also there is an exclusion. Under a company also there is a exclusion. Otherwise company के लिए उन्होंने speculative business की definition को under section 73 define कर दिया, explain कर दिया through this explanation. But पहले मैं इस company में से जो exclusion है उसको निकाल दूं. कौन सी वाली कंपनी के ऊपर ये explanation नहीं लगेगी? Other than a company whose gross total income consists mainly of. Now this mainly has not been defined. Is it 50%? Is it 75%? Or is it 100%? Right? But we presume that we are talking about majority, whose gross GTI consists mainly of income which is chargeable under which head? Interest on securities, income from house properties, capital gains, and income from other sources. No PGBP. Other heads. So such kind of company, it will get excluded. So on that company, on such company, there won't be any explanation applicability. जो ये explanation बोलने लगी है, उसकी applicability नहीं रहेगी. Or a company, the principal business of which is the business of banking. So the banking company. So the banking company and any company whose GTI includes mainly interest on securities, income from other sources, capital gains, and income from house property. These two kind of companies will get excluded when I read through this explanation. Now, what does this explanation say? Now they say where any part of the business of a company. So other than these two companies, so even if these two companies are there, not on these companies, if there is any now company whose some part of the business consists of what? Consists in the purchase and sale of shares of other companies. So that means what? We are doing transactions. But let's again read purchase and sale of shares of such other companies. Then such company shall. So very clearly, shall is the word. Shall means what? It is going to made applicable for the purpose of this section. Very important. So they are not saying कि हम 43.5 को repeal करके वहां पे भी यही fit कर रहे हैं. Only and only for the purpose of this section, they say it will be deemed to be carrying on a speculation business to the extent to which the business consists of the purchase and sale of such shares. So when I talk about day trading, I am a company, I am into day trading, not F&O, I am into day trading. So every day in the morning, I purchase X shares, any high beta shares. Say I purchase future retail, or any which have high betas. So I purchase those shares, and I know there is a high chance of going with the upper circuits or the lower circuits, all that stuff. So daily I purchase in the morning at 9:15, and by 3:30 I sell it off. So I'm doing day trading. As per section 43(5), it's speculation. As per 73, it's speculation. कोई बात नहीं, कोई टेंशन वाली बात नहीं. वहां पे भी 40 स्पेकुलेशन है और यहाँ पे भी स्पेकुलेशन है. So once it is speculation, so section 73 clauses of speculation which is limited to only speculative income and 4 years, that will become applicable. So यहाँ पे तो law clear है, यहाँ पे मुझे भी समझ आ रहा है. But if I have a F&O transaction, then what? Or before I take the F&O transaction, if I am not a company, and I'm doing a day trading, then under section 43(5) also it's a speculative business, and under here also it's a speculative business. For that I don't have to read explanation because this does not contradict that. Day trading mein 43(5) is also very clear that it's a speculative business. But where is the hurdle? Issue kahan pe hai? Issue hai where it is a company and it is transacting into F&O derivatives. So I have a loss from day trading, I have a loss from shares, I have a loss from derivatives. Now, will all these three losses qualify within the definition of speculative business and restrict my set-off and carry forward provisions? This is what this explanation is creating a hurdle. So through this explanation, what it says, there is a Delhi High Court judgment which have tried to interpret this explanation, and this is in favor of revenue. This is in favor of revenue. CIT versus DLF commercial developers. This is in favor of revenue, which says, so there are these are the case laws which just say that F&O transactions, although they are derivative transactions, but they carry the character of speculative transactions for section 73, and any loss arising thereof from will be characterized as loss from speculative business and not as non-speculative business, and thus their set off and carry forward will be restricted by the provisions of section 73. One of the reasons given by CIT versus DLF's commercial development judgment by the Honorable Delhi High Court was what? That as per court, they said section 43(5) defining speculative transaction is only for the purpose defining terms used in section 28 to 41. 43(5) has no application over section 73. Now, this judgment specifically spoke about that. So some of the key notes from this judgment which are being put here, what they say is, it says it is apparent facially that the term speculative transaction has been defined only in section 43(5). At the same time, it is qualified that the scope of the definition is restricted in its application to working out the mandate of section 28 to 41. So they say what? That 43(5) cannot override 73's explanation. Section 43 defines for the purpose of section 28 to 41 certain terms, right? So it talks about the cost and everything. So these latter provisions fall in chapter 6, section D, which deals with competition of business income. It does not speak about anything about carry forward or so. The court cannot ignore or overlook that the definition, to the extent excludes such transaction from the mischief of the expression speculative transaction, is confined in its application. Parliamentary intendment that such transactions are also excluded from the mischief of explanation to section 73 subsection 4, however, is not borne out. So they say if we cannot ignore what has been written under section 73(4), explanation to section 73(4) has been enacted to clarify beyond any shadow of doubt that share business of certain type of classes of company are deemed to be speculative. Because there is an explanation under section 73(4) and which have categorically said that these kind of companies, other than the exclusion, if they trade in shares, then this business will be qualified as speculative business. That in another part of the statute, which is 43(5), which deals with computation of business income, derivatives are excluded from the definition of speculative transaction, only underline that such exclusion is limited for the purpose of those provisions or sections. This is what Delhi High Court judgment speaks about. They say that even F&O transactions will qualify as speculative transactions, and any losses from the speculative transaction of F&O trading will not be adjusted against any gains from any other normal business. However, I have few other favorable judgments. First one is by Sukon India Limited. I think Dr. Rakesh Gupta sir have represented the SESI in this case. They were also involved in the business of trading of shares and securities as well as works contract. So there is another business also. Now, during the scrutiny proceedings, AO identified there was a loss of approximately 27 crores from business of trading of shares. Or works contract said there was a profit of 1 crore 80 lakhs. Though SESI did what? In the return, he adjusted this 180 crores against the loss of 27 crores and filed a net return of 25.95 crores. Now, this 27 crores loss, which was there, out of it, 10 crores loss was from shares, 25 lakh loss was from intraday trading, and 17 crores was from derivatives. Sorry. AO held, तो ये जो 17 करोड़ का डेरिवेटिव का मेरा लॉस था, this loss I have tried to adjust it against the profit of 1.80 crores. Law said, sorry, you cannot adjust it. Because the loss from shares, which were 10 CR, either it is a short-term or a long-term loss. Being a capital loss, it cannot be adjusted against the business. It has to be adjusted against the capital only. Intraday trading, 25 lakh, very clear. It's a speculative loss, so it cannot be adjusted against the works contract. So I am now targeting the 17.27 crores, which I try to adjust against 1.80 crores. What the AO held? AO held that the SSC company was engaged in dealing in shares, and therefore explanation to section 73 of the Act applies directly to the SSC. And accordingly to the said explanation, if any part of the business of the company consists in the purchase and sale of shares over the company, then for the purpose of section 73 of the Act, the SSC shall be deemed to be carrying on the speculative business to the extent of business of purchase and sale of such shares. Accordingly, the loss from trading in shares amounting to 10 CR was held as loss from speculative business. Similarly, he held that even derivative transaction might not be speculative under section 43(5), but when the dealing in those is undertaken by the company which forms the business of such company, the provision of explanation to section 73 comes into play. Accordingly, AO, the provisions of section 73 are specific and relevant for the limited purpose of set off of the business. So he says even that derivative loss will not be covered. But how the judgment got favored? The learned counsel said that as far as the losses from the derivative transaction was concerned, the issue in dispute has been decided in favor of revenue in the case of DLF, the one which we have discussed. However, there is this issue is on dispute, and there is another favorable judgment in the case of SSC by the Honorable Calcutta High Court in the case of Asian Financial Services 70taxman.com, which favored the SSC. Now, what does this judgment said? It said, it would appear that the activities appearing in clause A to E are not to be deemed to be speculative transaction, 43(5). Therefore, this comes within the category of deeming provision, which is however distinct and separate from any other business. Now, the question is whether loss arising out of such deemed business can be set off against the profits arising out of other business, or which businesses which may for clarity be called proper business. Under Section 70 of the Act, the assessee is entitled to have the loss set off against his income from any other source under the same head unless otherwise provided. Therefore, answer to the question is that the assessee is entitled to have the loss arising out of deemed provision set off against the income arising out of business proper unless otherwise provided. The question, however, remains whether the explanation to subsection 4 of section 73 relied upon by the DR. A plain reading of the explanation quoted above cannot be said to be have provided otherwise. In that case, the irresistible conclusion is that the business assessee is entitled to set off such loss arising out of deemed business against the income arising out of business proper. The learned tribunal has supported the contention of the revenue relying upon the judgment of the Delhi High Court. The view expressed by Delhi High Court are contained in a part of the sentence, which is as follows. By all accounts, the derivatives are based on stocks and shares, which falls squarely within the definition of explanation to section 73(4). But Honorable Calcutta High Court said what? We are inclined to think that this clause of the sentence, which falls squarely, qualifies the word shares and not the word derivatives. And this is what, when we were reading the explanation, we pointed out that there the word shares has been given and not the word derivatives. Thus, the Honorable Kolkata High Court said, we have no difficulty in accepting the views of the Delhi High Court when they say the shares fall squarely within the explanation of section 73(4). So when I talk about shares, then definitely 73(4) is there. But we are unable to agree when derivatives are treated at par with the shares, because the legislature has treated them differently in few of the sections under the Income Tax Act. So when derivative has been separately touched upon, here the word shares has to be read as shares only, and they cannot include derivatives. This case, although it is it was argued at a Delhi tribunal, but its jurisdiction was Punjab and Haryana High Court. That's why because of that jurisdiction, the assessee got a favor, because Delhi High Court judgment didn't become a jurisdictional High Court judgment. So they saved themselves. So they argued, the assessee learned counsel of the assessee argued that because there are two judgments and none of them are jurisdictional judgments, and in one judgment the assessee is having a favor, in another judgment the assessee doesn't having a favor. So he said, Honorable Supreme Court in the case of Vegetable Products Limited have very categorically said that where there are two judgments, two different judgments forming two different opinions, one in the favor of the revenue and one in the favor of the assessee, and there is no jurisdictional High Court judgment available, then the one which is in favor of the assessee, that has to be applied. And this is how the Honorable Delhi Tribunal in the case of Sucon India Limited favored the assessee and gave them the benefit. Again, another judgment by the name of Felix Enterprises. This also has been given by Delhi Tribunal, although this judgment has come before DLF. So DLF came thereafter, but in this judgment also, assessee had a derivative loss of 1.80 crores, which the AO did not accept it as a non-speculative and treat it as a speculative and didn't adjust it against the normal business. In this case also, he got a benefit. Even at before the CIT appeal also, he contended that F&O transactions were taken by the relegate securities, which is registered under NSE. So I qualify within the non-speculative transaction, which has been defined under section 43(5). It is submitted by the appellant that NSE is a recognized stock exchange for doing F&O transactions, which has been recognized by CBDT circular. It is further submitted by the appellant that all transactions were done through Messrs. Relegate Securities, which is a recognized stock member of NSE, and it is a recognized stock exchange. Therefore, the income derived from F&O was the business income, and thus the loss or profit has to be treated as business loss or profit. And before ITAT also, they said, the Honorable ITAT Delhi bench very categorically said that we find that there is no dispute that assessee has incurred loss in share of shares future and not in trading. Explanation to section 73 is applicable in the case where the business of a company consists of sale of and purchase of shares of other company. Share futures are different from the shares. So again, we have to just hit on the nail that derivatives are different. Derivatives shares does not include derivatives. So you cannot read section 73 as different. when it comes to derivatives. So section 73 only and only limits itself to shares. The purpose of investment in shares is capital appreciation as well as earning of dividends. So explanation to section 73 is applicable only in the case of company, whereas section 43 is applicable to all classes of persons. Thus, the learner DR argument that in the case of the SSC hit by explanation to section 73 does not carry any force, as if that be the intention of legislature. The whole purpose of amending section 43.5 gets defeated. We all know section 43.5, I think, got amended in 2009. So the whole purpose of amending it and taking the derivatives out of speculative definition will get defeated, because prior to that, F&O was a speculation. Post that amendment, the F&O transactions became non-speculative. So the whole purpose of amending that section gets defeated, right? So we have to just remember that in case we come across such client who wants to get it registered and we get a notice, so we have to remember that explanation only speaks about shares and not derivatives, right? So I'm touching the last part. This is the accounting treatments, which I believe we have to take control of. There has been a guidance by the institute also, which speaks about the index, equity index and equity stocks. AS 31 and 32 also talks about the presentation and disclosure of derivatives in financial statements. So we have to just take care of, if there is a loss, then we have to declare that mark to market loss on the date of balance sheet date. Now, one aspect which I wanted to touch upon, although it's a very single slide I am touching upon, which we can form an opinion, we have to understand that under section 214, the capital asset definition starts with the word property. Now, property as it is a very, very vast thing, because section 214 gives the exclusion, but property defined is not there. So only and only there are exclusions which has to be excluded. Other than anything can become a property. Now, under section 247, which speaks about transfer in the case of capital asset, there are two things which speak about extinguishment of right and relinquishment of right. And when I talk about call or put derivatives, futures and options, I'm carrying a right. I'm carrying a right. So the moment I say I'm carrying a right, I can say that I am holding some property with some value. So if I want to, I can try and disclose that F&O into capital gains also. But because F&O transactions happen very frequently, I have to take control of this circular also. If we all remember, earlier this question was always there. Whenever I used to trade in shares, whether it is going to be taxed at 20% or 15% as per the capital gain taxability, or they may get exempt under section 1038, or they will qualify under the business head. So there has been numerous judgments which differentiated, no, this is not an investment. The amount of transactions being entered by the SEC are so high that we will qualify it as a business income. But the moment I enter into business income, I know I will be taxed at a slab rate. I will get taxed at 30%. I might not get the indexation benefit, all that stuff. So that was not there. But then definitely the circular came in, the Supreme Court judgment came in, which very categorically gave how the principles with respect to how to determine whether the shares will qualify as an investment or will qualify as a stock in trade. So the crux out of that was basically what? That we have to prepare two different portfolios, because they said where a company purchases and sells shares, it must be shown that they were held as a stock in trade. So if I am regularly transacting, definitely then I have to show it as a stock in trade. Substantial nature of transaction, the manner of maintaining books of account, the magnitude of purchase and sale, and the ratio between purchase and sale and the holding would determine the nature of transaction. Ordinarily, the purchase and sale of share with the motive of earning a profit would result in the transaction being in the nature of trade, adventure in the nature of trade. That means what? It will become business income, where the object of the investment in shares of a company is to derive income by way of dividend. then such profits become part of the investment, and then I can say it is a capital gain and not a revenue receipt. Thus, the crux came that wherever possible, try to make two different portfolios, one for the investment part and one for the shares stock and trade part. So if we are trading regularly in some of the stocks, the profitability out of that will be business income. If I'm investing it long term, 1 month, 2 months, 1 year, 5 years, that will become qualify under the capital gains. So either that will be short term or long term. But this is only and only possible if I have two different portfolios identified. For a reason, under the same demat, under the same trading account, I am merging all this. So end of the day, the AO is going to see a not a bigger picture, but a very small picture, and he will say कि भाई तुम्हारा तो सब कुछ एक में ही है. So whatever profits or losses are there, I am going to take them to the business income, and I am going to tax it as per the provisions of business income. So this is what we have to look after too. So this circular we can support if I want to go for F&O also, which I believe I can. Although there is no hard and fast rule, but still I believe if I want to bifurcate it, take it out from business income and classify under capital gain, capital head, so I can, because there under the property, I can take it as a capital asset definition, because it is nowhere under the exclusion part. Shares as such are a property, are a capital asset. So the right on those shares in the shape of F&O can also become a capital asset. And if I want to take it there, I can take it there. So few of the questions, I will quickly try to take it up. I think I'm already crossed my time. I am engaged in buying and selling of shares. I do not take delivery of shares, and these transactions are speculative in nature. What is to be taken as the turnover for the purpose of determining, as we have understood, plus and minus both has to be included. Net of sales and thing has to be taken. Are short-term and long-term capital gains to be taxed under the same head? Yes, they are taxed under business capital gain head. Is a speculative business also to be taxed on the capital gain head? Generally, we say it won't be. Any profit and gains from speculative transaction is to be taxed under the PGBP only. In case of speculative transaction, all expenditure allowable under section 32, 38. Can any other expenditure also be made available to me? Yes, all the expenditures are available to do. But however, we have to prove that they qualify under section 37 of the Income Tax Act. Business purpose के लिए होना चाहिए, personal purpose के लिए नहीं होना चाहिए. Security transaction tax, it is allowed as expenditure under PGBP, but it is not allowed expenditure under capital gain head. Section 48, proviso to section 48 does not allow STT as an expenditure. But if I am into trading, if I am into business, then STT expenditure I can claim. So this answer we have already concluded. Can a business loss be set off against salary income? This is about the shares we have already discussed in detail. So this is my deliberation on the point tax effects relating to F&O transactions, sir. So Kunalji, over to you.
Thank you, Amitosha. Your deliberation was quite detailed and very informative with real-time examples and illustrations. We will be taking all the questions at the last once we are through with the Navya also.
Done, sir.
Just request Navya ji to start his deliberations.
First of all, very good evening to the members who have joined. My sincere thanks to the committee for giving me an opportunity to interact with members on the very peculiar topic, impact of GST on capital markets. My sincere thanks to Anuj Goyalji, the chairman of the committee, my co-speaker and elder brother, I would say, Amitosh sir, and marvelous deliberation, Amitosh sir, I should say, and Avinash sir in his absentia. I acknowledge his presence also. Kunalji for coordinating the whole session, Amit ji for the actual implementation and running of this session. Thank you. Coming to the topic, that is GST implications on the capital market. To be very frank and to share with all the members, the implications of GST as we ever thought is not direct, but as the word of GST, it is indirect taxation. The taxation impact also stands indirect. The implications of GST is inevitable on any industry, any aspect, any professional, or any assessee. GST implications, I cannot say that it is, since securities are out of the ambit of goods or service definition, I cannot sincerely say that we do not have the impact of GST. Yes, indirectly, we have impact of GST on every single market, including the capital markets. As today, the topic would also be covering the impact of capital markets in the scenario of an assessee and in the scenario of a broker also. So both have an indirect tax impact of GST, both on them. So let me share my screen and start something to share with you in an interactive thoughts. Allow me to share my screen and keep noting certain things wherever you find the things very important. Also, I would be sharing the presentation with the committee, which they will be circulating to the members for the larger benefit. So I have started my screen sharing. And let us now start understanding the impact of capital markets, GST on capital markets. To be very precise, we have GST impact to be looked into from the two perspectives. First perspective would be lying on the assessee, which normally I can say a layman, how GST has impacted them. Then I would also be covering to the impact of brokers because they are an integral part of the capital markets. They would be having an impact of GST on them also. So that we also need to look into. So when I talk about the impact, firstly, I need to understand whether we actually have the ambit of GST on the securities or not. For that purpose, we have to understand what actually securities mean to us. What actually securities mean to us? Let us look through a presentation. So when a definition of security we talk about, securities shall have the same meaning. It is covered under section 101 of section 2. It is a subsection. It says securities shall have the same meaning as assigned to it in the clause H of section 2 of Securities Contract Act 1956. To be very clear with all the members, the securities itself is not defined in GST. It has been taken and borrowed. It has been taken and borrowed from another act. When I say it has been taken and borrowed from the another act, let us go and dive into the another act and understand the definition of securities. Because goods and service itself definition have an exclusion of securities, तो हमें ये एक बार समझना पड़ेगा कि why, what are actually securities and why are they excluded. चलिए, so let us deep dive into another section of Securities Contract Act 1956, where the section 2 clearly states securities shall include. It is an inclusive definition. It is an inclusive definition, first of all. So securities include shares, scrip, stocks, bonds, debentures, debenture stock, and other marketable securities of a like nature in or of any incorporated company or any body corporate. So when I say it is an inclusive definition, we have to get into one thing. We have to understand one thing, that shares, scripts, and even like nature securities are a kind of a securities as per Securities Contract Act. It includes derivatives, as Amitosh also covered briefly and deliberately. He said derivatives are whether shares or not, or stock or not. I will also be talking about, as Amitosh talked about, turnovers as per Income Tax Act. The turnover as per GST Act also have an intricacy of this GST implications. Units or any other instrument issued by any collective investment scheme to the investors in such schemes, these are also securities. Security receipt as defined in clause ZG of section 2 of Securitization and Reconstruction Surfasi, जो act होता है 2002. Units or any other such instrument issued by investor under any mutual fund scheme. These all are securities. एक explanation भी added है section 242 के अंदर of Securities Contract Act के, which says for the removal of doubt, it is hereby declared that securities shall not include any unit-linked insurance policy or scripts or any other instrument by whatever name called. तो जब हम इस बारे में बात करते हैं कि सिक्योरिटीज क्या होता है, थोड़ी सी और इंट्रिकेसीज के अंदर जाते हैं. Would forward contracts in a commodity or currency be also in the ambit of definition of supply? क्यों? क्योंकि जब हमने बात करी कि securities itself is excluded from the definition of goods or service, I have to typically talk about certain things where क्या कोई चीज गुड्स बनेगी या नहीं बनेगी, या वो सप्लाई बनेगी या नहीं बनेगी. एक बार गुड्स और सर्विस की डेफिनेशन को पहले देखते हैं और उसके बाद इस क्वेश्चन को हम प्रॉपरली आंसर कर पाएंगे. As per 2 subsection 52 and 2 subsection 102 of CGST Act 2017, goods and services is defined as it is available on the screen. Goods means every kind of movable property other than money and securities. Money is also excluded, securities is excluded. And we have already read what is securities termed as. It has to be as per Securities Contract Act, but includes actionable claim, growing crops, grass, and other things attached to or forming part of land which are agreed to be severed before the supply under the contract of supply. This is an irrelevant portion that we need to ignore for the today's discussion, but we have to only focus that goods means any movable property other than money and securities. When I talk about services, because since we are talking about GST, we have to understand whether it is a goods or a service. If anything is a service, it means anything other than goods. To be beautifully explaining this definition, GST Act has clearly mentioned anything which is not a good is a service. So to make it a wider ambit and cover everything, but it clearly accept one thing, that is money and securities, again similar to the goods definition. So securities here also is excluded for the purposes of goods and service. Now the question comes into mind, when there is no goods or service or included in securities definition, why are the implications of GST there on the goods, security or the capital markets? Again, it is a indirect tax and having an indirect impact. So today we are very much clear that goods and service do not include securities. So anything which we are doing in a trading of goods and service, any income which we earn is excluded for the purposes of GST. क्या मैं इसको कहूं कि इसकी टर्नओवर इंक्लूड की जाएगी? Will it be included as a turnover? To be very precise, when anything you are dealing in goods and service, let me talk about now. Let me talk about one thing. अभी मैं एक normal assessee की front से बात कर रहा हूं. Let me talk about a profit and loss of a assessee. Profit and loss of a assessee contains many incomes like trading income. ये मैं operational income की बात कर रहा हूं, उसकी जो products में वो deal करता है. He must even have a share trading. So should this be included in the aggregate turnover for the purposes of GST? No, it is not included. Why? Because it forms part of a no supply. It is a no supply as per GST. I should say it is a no supply as per GST. अब मन में एक ख्याल आता है कि जब ये टर्नओवर में कैलकुलेटेड नहीं है, when it is not calculated in the turnover purposes, what implications do have? What implications do it have? For an assessee point of view, there are implications when I talk about related to first, input tax credit. Second, I talk about incomes. When I talk about incomes, I am clear that it is not forming part of tax structures. It is not a supply as per GST. No GST can be triggered. तो यहाँ पर GST इसके ऊपर नहीं आ पाएगा. However, when I come to input tax credit, we have many expenses like we have broker expenses or broker commission. So as we already have a question answer session in the last, we would be welcoming questions in this regard also. Churning of mind thoughts is very important. Till that time, we reach the question answer session. We have broker commission coming into the play. Is GST applicable on it? Is GST applicable on it? Yes, it is applicable. यहाँ पर GST आपका applicable नहीं है और यहाँ आपका GST applicable है input tax के अंदर. What about the input tax credit? What about the input tax credit? It becomes forming part of the cost. It becomes forming part of the cost. It is nowhere a dispute here. However, disputes sincerely arise about the common input tax credits. Disputes sincerely arise about the common input tax credits. When I talk about the common input tax credit, the disputes start to arise. And here we need to understand what actually you mean by the exempt supply. अगर आपके कोई भी common input tax credits हैं, if you have any common input tax credit, that sincerely needs to be taken into account for Rule 42 for the common input tax credit reversals. And to be very precise, we have to understand exempt supply first. An exempt supply as per 2 subsection 47 of CGST Act clearly defines an exempt supply means a supply of any goods or service or both which attracts firstly nil rate of tax or which is wholly exempt from the tax as per section 11 जो कि 12/2017 notification number में already list दी हुई under section 6 of IGST Act and includes non-taxable supply. Sir, and includes non-taxable supply. Mark these words, these are very important. Mark these words, these are very important. So when I talk about section 16, abhi we are talking from the front of an assessee, how it is impacting his pocket. When I talk about the eligibility section, section 16, subsection 1, it is very clear that every registered person shall be subject to the condition and restriction as may be prescribed, be entitled to take the input tax credit for any supply of goods to him which are intended to be used in the furtherance or in the course of business. When we talk about the things which are in the course of business, you are allowed the input tax credit. Now the question comes into the mind. We are dealing in securities. We are dealing in securities as well as doing some other business, or I should say securities is a sideline business. A trader is also doing a securities business side by side. Is it not his furtherance of business? Yes, it is his furtherance of business. तो क्या इसको brokerage का input मिल जाना चाहिए? As far as section 16(1) is concerned, yes, he can be allowed. But when 17(2) comes into picture, it restricts allowance of input tax credit to the extent of expenses attributable to the taxable supplies. So for the purposes, I said it is a no supply. And when it is a no supply, it is treated like an exempt supply nature only. It is not a taxable supply, to be very precise and frank with members. And when it is not a taxable supply, a brokerage expenses credit cannot be taken. It adds to the cost. In other words, input tax credit attributed to exempt supply is not permitted. An addition, icing to the cake is added by section 17(3), where you have a common input tax credit. Where you have a common input tax credit. There are expenses certainly like audit expenses. मैंने आपसे बात की for a business which is trading in some another aspect also and doing securities business also. उसके audit का खर्चा, the expense of the audit shall also be a common expense. Then in that case, the apportionment comes into the picture. In that case, apportionment comes into the picture. And for that purpose, mark my words, apportionment clearly is under Rule 42. Rule 42, we all are very aware of this. Rule 42, it is a disaster rule when I talk about common input reversals. Many of the assessee miss this provision. Many of the assessee miss this provision. So when I talk about section 17, it clearly says, then you have to reverse the input tax credit. It says you have to reverse the input tax credit.
Navyaji, you have gone mute.
I'm sorry, I gone mute, sir. Okay. Sir, कहाँ से चल रहा था कुणाल सर? चलिए. So we have to first determine for the rule 42, 43 purposes I was discussing. For the rule 42 or 43, we have to understand rule 45 clearly saying an explanation. The value of securities shall be taken as 1% of the sale of value of such securities. When I talk about, actually, there is no guidance in determining in the statute of GST for determining the value of securities. So let us take it one by one. Let us take it one by one, delivery-based securities. In case of delivery-based securities, things are very pretty easy to determine. When X value of share be sold at a particular value, it is the sale value of the price which is realizable from the buyer. Similarly, in case of debenture, preference shares and other securities where the delivery is to be given by the seller, the value is pretty easily determinable. But when I come to non-delivery based securities, in case there is no physical asset in hand, there is only a speculative trade done by the person. As income tax ka guidance note 44AB kya kehta hai? It says it shall not be included in the transactions of scrips. Thus, he do not intend to sell the share as there is no delivery available, but merely creates a fictitious position which shall be netted by him before the end of the trade. Thus, when an unascertainable future goods being sold cannot be equated with the sale of movable property, the supply value cannot be taken in case of actual sale of goods of such securities. Sale of goods act specifically includes stock and shares in the meaning of terms of goods. Therefore, other provisions of automatically would apply to this thing. As per section 6(3) of the said act, where any contract of sale, the seller purports to effect a sale through a future goods, the contract operates as an agreement to sell the goods. In the instant case, the contract through which the assessee sought to buy the units was certainly a contract to buy the future goods. So when I can say, यहाँ पर in an ultimate result, there is no sale by the assessee, and when there is no sale, there is no question of receiving the sale proceeds. तो इस वाली को हम include नहीं कर पाएंगे उस 1% rule में. Next we have to move to derivatives. When I talk about derivatives as defined above are the instruments which draw their value from another underlying assets or group of assets or another security. So popular category of derivative includes future, forward option, and swap of all kinds, forex, CFDs, etc. In case of derivative, the value of securities cannot be taken as the value of supply for the reason discussed above. It is clear in the Mumbai bench. In case of Babulal Enterprises, it has been held that the turnover in case of an assessee engaged in the business derivative has to be calculated on the basis of the guidance note of the 44AB. Particularly, Amitosh sir also covered this topic. And when I say to be precise, the total value of favorable and unfavorable shall be taken as the turnover, or the premium received on such option is also included in the turnover. And respect of any reverse trades entered, the difference therein shall also form part of the turnover. There are certain contrary views to this also available. Rule 42 क्या कहता है? देखिए, Rule 42 1C कहता है आपको the amount of input tax credit attributable to the input and input intend to be used exclusively for effective the exempt supplies. They have to be reversed. कैसे reverse करते हैं? Common into exempt upon the total turnover. Common into exempt upon the total turnover. This is the credit reversal that you need to do. And when you credit reversal you need to do, यहाँ पर that gets forming part of the output tax liability automatically. So there are certain contrary views to this also available, which I tried to compile on the presentation for today. And contrary view says the 17.2 itself do not have any word of exempt supplies, including securities. So there can be a contrary view or a litigative aggressive view available, which are clearly stating when a section do not have any chargeability, the mechanism of calculation cannot be invoked. So these intricacies are also existing. However, I have to cover certain other aspects also. When I talk about capital market implications, many studies have said one thing. Many studies, when GST was in the implementation stage, as far as the worldwide markets we have studied, it says when GST get implemented, long-term investing trends over the short-term investing trends tend to be higher. The perception of market changes. I totally agree that the practical front or the market variations are dependent on many other factors as well. There are many other factors existing which purports or directs the views of the market trends. However, still, if we only consider GST as a indicating factor, GST have impact of changing the perception of the investors. As far as we study the worldwide global markets, it says when GST was implemented and we see the pre-GST era, we have 15% service tax before the implementation of GST, and post implementation the rate automatically increased by 3%, that is 18%. The costing factor increased by 3 base points. And when this increased by 3 base points, the person who is daily trading in and out, his profit margins tend to decrease by this or squeeze or shrink to that extent. Because when I talk about 3 basic points, it can be somewhere hitting his pocket because his input tax credits are also not allowed. So he might be thinking of investing in the long term in comparison to the short term, so that this 3 base point cost also gets recovered in that period. But then when I talk about other factors also, the things have different perception. There can be different perception to it. But yes, indicatively, when I talk about GST, the implications can have a change in market perceptions. They can have a change in market perceptions. Even when I talk about mutual funds, the total expense ratio of an equity fund is estimated to go up by 5 basic point as a result of GST. Then the performance of that asset has to be reevaluated. So when GST was implementing, I know many of the investors, the guiding pillars were already discussing the implications and impacts and discussing how to invest or reinvest things in the post GST era. The another thing is that when GST gets implemented, again, when I am taking the indicative GST as the only measure, we have to take one thing in regard. We have to certainly think one thing in regard, that is equity will emerge as a smarter class asset to play the growth. I believe GST, when it gets implemented and it settles in a certain phase of time to see in future, equity will be emerging as a smarter play than the other class of assets. How? It is as per the global market expectations. See, sir, when GST got implemented in many of the economies of the world, in the later stages, I'm not talking about the first 5 years. In the later stages, the GDP tend to increase. The GDP tend to increase might be by slight percentages. And when GDP tend to increase, the market capitalization increases. It is a result of the market capitalizations. And when that increases, the equity is itself the underlying factor for that. So totally, when I talk about GST implementation, it is not one side we have to see, that is the cost. It is the longer perspective we need to see. And when I talk about longer perspectives, things like growth of economies certainly depend on these things. However, we are seeing the bumpy ride in GST. Many technicalities, many implementation, then rollbacks, implementation, rollbacks, notifications, complications have tend to increase. But this is the teething issue we need to face. We were totally ready for the teething issues. And when I talk about teething issues being going away, certainly GST will be giving positive effects more than the negative effects. Also, to highlight one other factor here, companies which are having huge storage capacities, godowns being affixed to every state when there was a state-based tax structures before GST, tend to shift from that culture to the need-based culture. When I talk about to a need-based culture, they would be putting their godowns only there where it is actually needed. And this has also reduced the cost structure for the companies, leading to the increments in the net profits. As the underlying factor, we had the anti-profiteering. We had the anti-profiteering in GST. And when the cost structures, many of the cost structures which were adding earlier before the GST were becoming a part of your profits, has to be shifted to the ultimate consumer. I'm telling you the bird's eye view and the broader perspective we need to understand. It ultimately increases the pocket of the investors. And when it increases, they tend to invest more. The cycle continues. And then equity class becomes the smarter class. Many a times, also to shifting to the another segment of my discussion today, we need to certainly target the brokers also. We need to target the data sharing capacities also. When GST got implemented, many state-based informations got streamlined to a national platform of GST common portal. A unanimous synchronized common portal called GST common portal, and when that has got implemented, certainly the data sharing became much more easier and legitimate than the earlier regime taxes. We had only one kind of reports that have to be understood from the GST common portal, not to compare from the different legitimate sources. And when GST got rolled out, and last few years, which have shown us the trend, when the government is trying to link the income tax portal with the GST portal, certainly the GST becomes inevitable to study when I talk about capital markets. As far as Amitoshji also covered about the turnovers aspect, when I talk about the turnover you are giving in GST and the turnover you are giving in income tax, would this share trading income forming part of the turnover of GST? No. When it forms part of a no supply, the annual return and 9C comes into picture. Press release dated 3rd of July 2019. Press release dated 3rd of July 2019 clearly have a clarification that no supply means supply which is as per Schedule 3. Exempt supplies. We have the different classifications in the annual return. And when we report anything in no supply, again the reconciliation starts. And that forms part of 9C, the reconciliation statements, which now is not to be signed by the chartered accountant, but the assessee himself, it has to be attested and submitted. Let me clarify one thing. The turnover reconciliation plays a vital role. And when data sharing across different platforms are clear, we are pretty much sure that 26 AS of Income Tax Act, Form 26 AS, have the informations more than that could earlier be shared after the implementation of GST. We are very sure that income tax also have a reconciliation with 3B, GST or 3B turnover automatically getting captured to income tax returns. So GST have an indirect impact on the assessee's pocket as well. When I talk about the cost might have increased by 3 basis points, but however, that have a larger perspective of increasing the equity market capitalizations, also increasing the GDP in turn. So that way, we will have a positive impacts to see in the near future. Now moving to the another segment of the brokers. When I talk about brokers, we have to discuss something called agent. An agent, for the purposes of GST also, we are clear that who acts on behalf of the principal. Who acts on behalf of a principal, and here in terms of capital markets, he received a commission called brokerage. Brokerage is itself taxable. Securities are not taxable, but the services related to securities are taxable. And when I talk about brokers, we have to understand one thing. Registration aspects come into picture. And all the brokers, to avoid litigation, have to take the registration aspect. Here also taxability of whether CGST, SGST or IGST needs to charge becomes a question. Let's say now you have taken the GST registration as a broker. Do you need to charge CGST, SGST or IGST? Recently, I was talking to some of the broker. I discussed whether anybody gives you his GST number for the purposes of input tax credit. He said no, because the input tax credit becomes his cost. So he's not concerned about the GST getting transmitted to his 2A or 2B. But then I asked him, whether are you charging CGST, SGST, IGST correctly? Here becomes a question. He said that I need to evaluate, because the place of supply provisions are different for different category of persons. When I come to the section 12, it clearly says the place of supply of banking services and other financial services, including the stockbroking services, shall be location of the recipient on records of the supplier of the service, provided that if the location of recipient is not on the records of the supplier, the place of supply shall be the location of supplier of services. To be very precise and to understand in the layman terms, my dear friends, it means if you have a proper records, which ideally I believe every broker have, if the supplier and the recipient, that is the assessee, is client and the broker, exist in different states, ideally IGST needs to be charged. However, if they both tend to have the registrations in same state, then ideally CGST and SGST needs to be charged. Here it becomes a very important factor, because GST is a destination-based tax and place of supply is the only guidance pillar, but which is the termination supply and which is the termination state, that totally helps to guide us whether CGST, SGST or IGST needs to be charged. However, I still want to highlight one important definition, that is the place of business. Why? Because the place of business is very important when I talk about any kind of place of supply sections. So the place of business as per section 285 to subclause 85 of CGST Acts provides the place of business where the place is business is ordinarily carried and includes a warehouse or godown, or a place where the taxable person stores his goods, a place where the person maintains his books of accounts, or the place where he is engaged through his agent by whatever name called. In case of operations of stockbroker, the place of business would be the following: all the branches of the stockbroker, where the stock exchange trading terminals are located and where the trade is carried out on behalf of the clients. Main office, head office, or the registered office, branch office, where the back office operations are operated are carried out, including issuance of bill, contract notes, account statements to the clients. Now the applicability. The applicability of GST when the brokerage services are tend to be concerned here, it lies on the broker services at the rate of 18%. It is chargeable at the rate of 18%. Whether interest on delayed payment charges are included, also it shall be applicable, but yes, there are certain clarifications when it clearly talks about it is like an advances and that can be treated as an exempt supply. Coming to some important questions. In case of a stock broking, whether a stamp duty, security transaction tax, or any other central state tax would be considered as a part of value of the supply, as prescribed under section 15, yani ki valuation ka section, GST is not payable by the stockbrokers on any of these recoveries as long as the condition of pure agent are satisfied. And let me be precise about the pure agent. A pure agent, as per GST Act, means a person who have a contract to procure goods or services on behalf of the principal. He does not hold or intends to hold such title. He is not the actual beneficiary of that procurement. And fourthly, he is recovering the exact amount and there is no cost addition. And I believe as far as the broker transactions concerned, these are all conditions are satisfied and the pure agency is satisfied. Hence, these are not to be included as per the valuations. These are not to be included as per the valuations. Moving further, is brokerage earned in the stock broking service liable to GST? Yes, it is appropriately taxable at the rate of 18%. Can a person take a voluntary registration under GST Act? Yes, a broker can take a voluntary registration for not liable अगर उसकी taxability यहाँ पर नहीं बनती. Is GST liable? That is what I was talking about. Interest, delayed payment charges to the client for debit of settlement obligation or margin trading. These can be treated as advanced and hence they can be treated as per 12/2017 notification as an exempt supply. The place of supply, we have already discussed. If you fall under the records are being maintained, it is the place of the recipient. If the records are not maintained, which I believe are very less in case of broker transactions, then it is to be CGST as GST charged. Two stockbrokers fall in the definition of intermediary as per the section 213 of ICAI Act. It is very important. Yes, the stockbrokers who arrange the supply of securities between two or more persons, stockbrokers would be covered as a definition of intermediary. Would sub-brokers or authorized person fall in the definition of agent? ये एक बहुत important aspect है. अगर stock sub-brokers जो होते, if they are only supplying service to the main principal, then they might not be an agent. However, in most of the scenarios, I should be concerned genuinely in the practical scenarios, they are supplying services to the clients and the brokers, and the sub-broker become the intermediary in that case. Yes, they are becoming an agent and their registration will be compulsory. Moving further, the place of business, we have already discussed that it shall include all the offices, main office, sub-broker places, premise neither owned or even rented can be covered here. Stockbrokers who deal with the clients who are resident of foreign portfolio investors. Will it be an export of service? The stockbroker being an intermediary. Here, I was talking very importantly, need to charge CGST as GST and it will not qualify as export of service in that case. It shall be treated as an intrastate supply and CGST as GST will be applicable. What will be the effect if you have paid wrong taxes? Let us say you were not aware and after today's deliberation, you try and check and identify certain transaction where CGST as GST is charged and you need to charge IGST. No issues, sir, no problem. You can take the refund as per section 77 and pay the exact tax which needs to be paid. Pay the particular tax which has actually to be paid and take the refund of the other tax. That is as per the section 77. And no interest shall be liable. Further, in case of stockbroking funds are received from the client as a margin money for trade, what would be treated as a consideration? No, these are considered as the deposits. And deposits, when identified and applied as a consideration, only then it is treated as a part of a supply and GST gets triggered. Next, can a stockbroker continue to issue bills and contracts under the normal stock exchange mechanism and issue a monthly tax invoice for the purposes of GST? Yes, he can. But however, for the brokerage, he needs to issue a tax invoice. What is the consideration as securities under GST? Are they taxable? We are very clear about the thing that goods and service we have already studied that do not include securities. It includes services of securities, but do not include securities, my dear friends. That is why it is not to be treated as a consideration. Further, stockbrokers provide many other services like depository participant, portfolio management services. Do they require registration for separate business verticals? Please be happy about it that separate business verticals is now removed as a concept in GST, and hence you can take registration even from different floors or different areas or different locations. So the vertical concept is already demolished and you can take registration for separate areas now. Whether GST will be levied on exit load on mutual funds, it is a pertinent question asked by many. Exit load in form of fee, whether or not as a fixed percentage is liable to GST, even if the exit load is in the form of units in the fund, it may be concluded that the consideration received in money was later converted to NAV, net annual value units. So particularly when I talk about these questions, many of the things would have been covered. However, one thing before actually we conclude about today's discussion, we need to understand one very pertinent feature about GST that I need to write here. Please note it if you feel. So here in terms of GST, we have to identify one certain majority coverage aspect. It has a effect of indirect implementation. And when I have an indirect implementation, might be we are feeling that it is forming part of cost, but it has a positive impact in the near future for the terms of investor I'm talking about. And when I talk about brokers, this was the very important point I want to cover now, that brokers have much streamlined system now. I have discussion with many of the brokers regarding GST implementation and they feel happy about it because now, as far as government and brokers are concerned, the tax evasion, tax leakage is particularly targeted. When the information flows automatically, brokers have only input tax credit related to the licenses, the demat, the depository payments they make. They might be including GST. Understand one very important aspect in terms of brokers, which I wanted to cover again here. They have to pay brokerage into GST as tax. So the turnover of a broker is only and only brokerage, not including the trading income. So here he has a very less percentage, I should say, might be even 1% also of brokerage, and that 1% only forms part of the turnover, nothing else. And when that is the turnover into the GST rate, that is 18%, has to be deposited. He might have an input tax credit of any license fees that he have paid to the, let's say, NSDL or CSDL and stock exchanges. So that input tax credit becomes his encashment and he had to pay the net cash for that tax. Streamlining of the system, when I'm talking about, is very clear that he has an impact in 2B now, which is now a streamlined system that any of the input procurements he is taking will get reflected in GSTR 2B on the 11th of the subsequent month, here from where he can collect the information and take the input tax credit as far as the input taxes are concerned. So This is all about the capital market structures that we need to discuss. The slides I shall also share has a many deep coverages about the case laws or judicial pronouncements, which shall also take you forward for the litigative views of whether the common ITC can be covered or can be reversed or cannot be reversed. However, in my view, it has to be reversed, but there are other school of thought existing which says it cannot be reversed or it shall be a litigative view. Before actually I hand over, these are my contact details. If I can be of any help regarding the GST aspects, feel free to contact me. It is 8447-137-367. And handing over to the committee executives, I would like to sincerely thank the committee members and the chairman, vice chairman for allowing me the opportunity to interact with all of you. Thank you so much. Handing over to Kunal for the further proceedings and question answer session.
Thank you, Navya sir. Now I request our session chair, Anuj sir, to take the question and answer questions. We have m number of queries. And
yeah, thank you, Amitabh ji. Thank you, Navya ji. Great
Thanks a lot, Anuj sir.
deliberation.
Thanks a lot, ji.
Really proud of you. Wonderful. We are having n number of queries very quickly. If we can take the queries, n number of queries, some advanced queries are there. Alok Gupta ji from Kanpur. And individual trading in capital market and in whole year. Individual trading in capital market and in whole year, he squared up the transaction in same day, called jobbing, only 4 to 5 times, and also purchases and sales of shares approximately 10 to 12 times in a year. Also, he also did future option. I want to know whether the sales of shares made 10 to 12 times the whole year will be treated as short-term capital or for business or profession. Amitabh ji?
सर आ रही है सर, आवाज आ रही है?
Yeah.
हेलो,
Yes, sir.
एक बार एंड पे रिपीट करेंगे सर, वॉइस ब्रेक हो रहा था. ही वाज सेइंग कि ही इज डूइंग फॉर 10 to 15 transactions a year.
Yeah, 10 to 12 times in whole year.
So
Will
no
be
issue,
treated
sir.
as short-term capital gains or income from business or profession.
So, but those in such a case we can cover it under the capital gain head, sir. Short term.
Okay, right. Thank you. Then we are having one query. Lot number of queries are there from Bikaner, Tarun Baji. How to calculate turnover in future and option for the purpose of tax audit?
Right, so I think me and Navya also have shared the views on this, sir. The way we have explained that all the positives and negatives has to be taken, and the writing options premium has to be considered, sir, in the case of F&O.
Yeah. Then we are having one query of CA Dhirendra Kumar ji from Ghaziabad. What will be the purchase sale value when purchase sale is through MCX, where there is no intention at all to take or give delivery in case of gold?
So even in that case, the premium is being paid, I believe, sir, in MCS also. So even in that case, favorable and unfavorable difference has to be taken, sir.
Yeah.
Because even in day trading also, sir, we basically take the difference only.
Yeah, right. Then see Alok Gupta ji from Kanpur itself. If a practicing member purchased equity shares to get 10% return, but at the time of closing the prices goes up to 15% and sold the same on same day, then the which had income to be shown, speculation or short term capital gain? Speculation, whether practicing member can do speculation.
Sir, I think as far as practicing is concerned, you are the best to answer it.
So see, we have already allowed income from equity derivatives, so it will come in the equity derivatives. Correct me if I'm
No,
wrong.
no, sir. But this is day trading, I believe. In shares, this is shares. So I think council have the committee
Yeah,
have taken in derivatives, sir. So I think this might be a problem for the practicing chartered accountant.
yes. They can very well have the income from investment.
Yes.
They can very well invest in shares and sell the shares. But if they will be getting it done in the same day, so practically it is speculative income.
Yeah. And so one thing I also have to see, like
And
in this example also, like whether they have played on margin or they have put up their money. Because if they put up their money, then we can definitely try to take it to the short-term part, sir. But
yes,
if they played on margin, then definitely it has to be covered under business speculation, sir.
yes. Then CA Manoj Kumar Chaube ji from Noida kindly also consider the taxation of unlisted shares is different that of listed shares.
Yes, sir. The taxability, the rate part will change, sir. Because the section 1038 and 115A gets applicable when it is transacted on a recognized stock exchange. So all these unlisted shares, they will be not transacted on a, they will be done off trading. So the tax rate will apply for that of slab rate or 20%.
Right. Then from Indore, Nitesh Maheshwari ji, whether TDS liability arises on SLBM fees.
On?
SLBM fees. SLBM. I don't know what is the meaning of SLBM.
SL. Navai, you know what is SL? I have to just check it out, sir. What is SLVM?
Google
मैं चेक करता हूँ सर, मैं चेक करता हूँ तब तक सर आप नेक्स्ट
नवेद एक बार
क्वेश्चन
देख लीजिए.
मैं देख रहा हूँ.
It should be SLBM or SIBM, I don't know. SLBM, it is written SLBM, yeah. Not SIBM, SLBM.
Sir, it is stock lending and borrowing mechanism fees.
Stock lending and
Borrowing mechanism.
so it is charged by the broker, sir, or by the exchange?
Yes.
I think it
And
must be
SLB, broker, I think.
by the broker, no? Maybe then it might get covered
I
under
think TDS liability is bound to be there, sir.
194C might.
Whatever transaction is there, the TDS liability will be there. Why not the TDS liability?
194C can attract her there.
Then CA Manoj Agrawal ji from Prayagraj. During previous financial year, a public listed company, MP Distillery Limited, duly taken over by creditors through order by NCLT and equity shares of all shareholders fully extinguished on 11th August 20 by resolution professional. As shares directly not sold, therefore STT not paid, whereas at the time of purchase, STT was duly paid through stock exchange registered brokers. Contact note. Kindly suggest whether long-term loss due to extinguishment of all equity shares on 11th August 20 to be carried over with the indexation benefit, that is listed shares under section 112 or some other method. Also tell that whether equity shareholders are having any right to claim such loss and in what forum. C. Manoj Agrawal from
Right. So in this case, one of the aspects which has to be seen is whether that NCLT order which has been passed, that has been taken over, whether that is under a scheme of amalgamation or merger or something. Because if that has been done, then the exemption can be taken under section 47, sir. So that possibility can arise in the hands of the shareholders, where under this scheme they have been their right has been extinguished and they have got the new shares, or even if they haven't got the new shares. So that part can be seen in this case, sir.
Yeah, thank you. Then CA Naresh Kumar Ketanji from Lucknow, whether interest on loan taken against equity, shares, etc., for creating margin for derivative transaction in stock market will be allowed as expenses against profit on derivative transaction.
Yes, sir. That is section 30 to 37, sir. Every kind of expenditure can be allowed, sir. So even if they are not covered under section 30 to 36, they can be exclusively covered under section 37, which says that it has been used for the business purposes, and this being their business.
Then CA Hitesh Dharorji from Bangkok, borrowing fees received on lending of shares, should it be considered as other income or should be considered as business income along with trading income? Further, can this income be set off against speculative income, margin trading or forward?
I think because borrowing, but it's not the main course of business, so it has to be treated as income from other sources, sir.
Yeah. Then we are having one query from Bhopal, CA Neha Jainji, is asking case 1, 44 AD application for first time case 2, profit loss treatment if turnover less than 1 crore and not keeping books of accounts. ITR 3 or ITR 4, case 3, 44 AD if in any of the previous years declared net profit less than 8% and tax audit was done. तो एक एक करके मैं बोलता हूँ और नहीं तो कंफ्यूजन हो जाएगा. नेहा जान जी बोलती हैं केस 1, 44 AD application for first time case.
First time case.
Yeah, for first time case.
First time के लिए 44 AD हो जाएगा सर कुछ. I think what I am able to understand is कि जो आपने बोला सर, अगर तो it's the first time the person is involved into this kind of trade or into business, so then he can choose 44 AD, sir. Because the exit clause which has been now put in 44 AD is that once I am into 44 AD and then I want to exit it, then I have to exit for 5 years, sir. So I think this is what ma'am have a query.
Yes. Yeah. Then case 2, profit loss treatment if turnover less than 1 crore and not keeping books of accounts. ITR 3 or ITR 4?
I think ITR तो मुझे भी याद नहीं कौन सी वाली चल रही है, but in that case non-tax credit case है, so even if they want to declare a lesser profit, that is very much possible, sir.
Very good. And then case 3, 44 AD if in any of the previous years declared net profit less than 8% and tax audit was done.
To get the tax audit done, sir. Now 44 AD is quite clear on this, sir. Now I have to get the tax audits.
Then Hitesh Dharorji again from Bangkok, can you confirm on the new limit of 5 crore of turnover for tax audit?
That's only for 44 AD, sir, not for 44 AB.
Yeah. Then we are having one query from Bangkok again. Case is having lot number query. What is the best option for NRIs to show F? F is forwarding.
To show
F. Then from Noida, we are having one query of CA Saurabh Jainji, very lengthy query. It is in derivative trading, there is no control over profit or loss made by an assessee. And I do not think the intention of the legislature is to tax profit or at 6% in derivative tradings. I think if we show profit or loss in the ITR, in the row where they say profit on security on which STT is paid would suffice and no tax audit would be mandatory in case turnover exceeds the specified limit and one does not earn 6%. In case, in your opinion, if tax audit is compulsory, please tell how the accounting entries need to be done. Should we do accounting for each and every contract or can we analyze the summary given by the brokers? Then how do we find out?
So we can
received or paid for call and put options. Yeah.
Right. So in this case, definitely there is no point entering each and every contract note. So the consolidated sheet which we receive from the broker, that will be sufficient to make the transaction, sir. And we have to form that as the basis of the books of accounts because they will form part of our books of accounts, sir.
Yeah. Then see Arun Kumar Lohia ji from Jaipur. For a single day derivative transaction, there is one bill. I have purchased one call option and paid premium of ₹1000 and write one call in another script for rupees 3,000. Net of my bill is 2,000. My financial book shows only 2,000. In this example, what will be my turnover, 2,000 or 4,000?
So these both transactions are done with respect to different stocks, sir. Okay, it was the same stock, buy and sell.
I purchased one call option and paid premium of 1,000 and write one call in another script, separate script.
Separate script, no? So though in this case, as of now, because both the call, the one which has been sold, basically, its premium has to be considered as a turnover, and the one which was bought, the first one, we have to just wait for when it will be sold. So the difference will be taken as part of the turnover, sir.
Then he's telling that I have salary income. Can I set off loss from shares?
Salary income? No, sir.
I have salary income. Can I set off loss from shares?
No, sir.
against salary?
No, sir. Business loss cannot be set off against salary, sir.
Yeah. You want to reduce the tax burden on the salary income.
Right, sir.
And then Vikas Jainji from Jaipur. In case of option trading, whether I do BTST or STBT, it is only the absolute difference which is turnover. Am I correct? For example, first case, buy at 5 and sell at 2, turnover is 3. Second case, sold at 10 and recovered at 2. My turnover here is 8. Total turnover is 3 plus 8, 11.
8 plus 3, 11.
Yeah.
Right, sir. Right.
Then from Jaipur, Vikas Jainji is telling what is the business code of F? Future. F is future.
I hope so. But what's the question? What's the business goal of futures?
What is the business code of F? Then we are having from Prayagraj, CA Manoj Agrawalji, a senior member, my good friend. If 100 shares of Tata Steel purchased on 1st April 21 and same all 100 shares of Tata Steel sold on settlement day on 3rd April, whatever gain or loss is a speculative or short term as physical delivery not turned to concerned depository account.
So in this case, because there was no delivery, then it will be covered under a day trading, sir. I think it's BTST basically.
Yeah. Then Neeraj Goyalji from Kuwait, can NRI claim income from capital gain as business income?
Can gain?
Can NRI claim income from capital gain as business income?
No, sir, but the ones which has to be qualified under capital gain has to be considered as capital gain only. It cannot be, the head cannot be changed, no? Until unless there is a reason behind it.
So from Ajmer, my very good friend CA Love Tamdaji is appreciating the delegation of our guest speaker.
Thank you, sir.
And then we are having one query from Jaipur, CA Vikas Jainji, my very good friend. Premium of option buying, which we carry forward to next financial year, coming as loss in client statement, being marked on daily basis. What is the right treatment for the purpose of ICAI?
So primarily it was to be done on the balance sheet date. So if I have taken the premium, say of in March, I have taken some call premium and its expiry was due in April. So on 31st March, I have to mark it to market. So if there is a loss, then that loss has to be booked. And the treatment of that loss will be, being a non-speculative business, it has to be PGBP, sir.
Yeah. Then CA Vineet Gupta ji from Noida, turnover up to 10 crores is out of ambit of tax audit. If total receipts, payments in cash less than 5%, whether applicable in case of F?
Yes, sir. That rule applies to future and options also, sir.
Then from Jaipur, Vikas Jainji telling in current year SSC having no F. What number of F are coming? Then CA Amitabh Vasne ji from Bhopal, what will be the trading and profit? Yeah, incomplete question, I think.
I think so. This must be during the deliberation itself only, na?
Yeah.
And maybe they
Actually, we can't go.
sometimes what happen. Sometimes we are writing a question and we get the answer with the from the deliberation itself only. Then we stop writing.
Yeah, there's one query is there. Let me read one query. Yeah, okay, no problem. Then we are having one query from Jodhpur, CA Mukesh Sankhala ji. He is appreciating the deliberation of Amitoj ji and Navya ji. Thank you very much.
Sure.
Then from Jaipur, Vikas ji is telling Vikas Jain ji, assessee never used 44 AD earlier. Upon complying with 5% cash rule, whether his tax audit turnover limit increases from 1 crore to 5 crore.
Yes, sir. Yes, sir. They can choose it.
Then from Ghaziabad, Rajiv Bhargav ji, my very good friend, and he having good knowledge of the capital market also. If I have delivery of some share, I sold them in morning and later it came down and I bought them back on same day. It will be short term or speculative? I think it will be short term, sir.
Short term, sir. Short term. They had the they had the shares in the demat account earlier, no, sir. So that will be short term, and now there will be a fresh buying, sir.
Then CA Mithilesh Srivastav ji from Bilaspur, can you provide a tree for speculation income for different persons for different activities, which savvy trading, intraday, share trading, sorry. वो शेयर में ये डबल ही लगा दिया मैंने, शेयर ट्रेडिंग, इंट्राडे, फ्यूचर ऑप्शन, डेरिवेटिव्स, एटसेट्रा.
करा दूंगा सर. Will prepare that and share with you, sir.
Right. कुणाल जी एक बार देख लीजिएगा ना, कोरियर कर लीजिएगा ना प्लीज. Yeah. Then we are having one query of from Seeker, CA Subham Sharma ji. Sir, there is any F. I don't know why again and again F is coming. I don't know. I don't know. Sorry. Then CA Rakesh Kumar Garg ji from Noida, he is appreciating the deliberation of both the speakers. Then from Kota, Ajay Jain ji, my very good friend, if turnover of business 5-6 crores and turnover in share transaction is 25 crore, then can we treat share transaction as investment?
So, but it all depends on how the frequently he have transacted. So that we have to see. But if we have to take it out of the ambit of business head, because that circular of 2017 becomes very important, sir, in such a cases, na? So we have to just follow that circular and figure out whether we can take it as investment portfolio or stock and trade portfolio.
Yeah. Then CA Nitin Chaudhary ji from Ghaziabad, whether the gain or loss from cash segment to be considered under head PGBP or capital gain for salaried employees, and which IPR form to be used?
Sir, if it is day trading, then definitely PGBP. If it is an investment portfolio, then capital gain, sir. If it is capital gain, then ITR 2 will be there. Otherwise, ITR 3 will be there, sir. If no tax audit.
Yeah.
If tax audit, then ITR 4.
Then we are having one query from Gopal. Neha Jain ji again. If an option is bought, then also the premium received on sale later will be added into turnover. If not, how the tax officer will assess if the position was long or short?
So, but although that is identified from the contract notes, but generally before the assessing officers, we share the complete statement only, in where the purchase and date is not sometimes available, but from the purchase and sale date only they will be able to identify it.
Yeah.
Because in the call writing, my sale date will be prior to my purchase date, sir.
Then Vikas Jain ji from Jaipur is replying, future and options trading business code is ITR 3. Okay.
Yes, ITR 4 is for audit, sir, tax audit.
Then Ankit Sarda ji from Pali, Rajasthan, excellent session. He is appreciating the delegation. And then we are having from Meerut, Vikas Jain ji, Praveen Sareen sir, Thanks for awesome information. Really appreciable. Lot number of appreciative communication is coming. CM Manoj Agrawal ji from Prayagraj, please provide PPT. Nice delivery and many thanks. कुणाल जी जरा कोऑर्डिनेट कर लीजिएगा अमितोष जी के साथ और नव्या जी के साथ that each and every participant can get the PPT without fail, without reminder.
Yes, sir.
है ना, कर लीजिएगा please.
Sure, sir. Sure. I will share it post this session, sir.
Yeah, please. Sir,
Done,
full
sir.
form of F number is future. Yeah. That we could understand. Because we were also understanding that F means future. Yeah. So thank you very much. N number of queries are there, but we have already exceeded the time. And I'm really grateful to Amitoj ji, our very learned speaker, the past chairman of Chandigarh branch, one of the most prominent branch of the northern part of the country, and C. Navya Malhotra ji, who is contributing
Thank you,
like
sir.
anything in the field of GST. And
Thank you, sir.
we were having more than 4,000 chartered accountants from each and every part of the world. I'm really grateful for making this session very interactive. Lot number of other questions are also there, but we are not in a position to reply each and every question. We are really grateful to Kunal Sharma ji and Amit Agrawal ji, who is taking care of this session in a great way, and of course Avinash Gupta ji, our chairman of Northern India Regional Council. So may I request CA Amit Agrawal ji, who is contributing in a great way in our research committee also of the Institute of Chartered Accountants of India, for a formal vote of thanks. CA Amit Agrawal.
Thank you, sir, for providing me the opportunity for giving vote of thanks to such a learned speaker and your esteemed self also. So I'm very, it was a wonderful session, sir, Amitoj Singh, sir, where you had gone through the direct tax aspects of the futures and options. And similarly to CA Navya Malhotra, sir, also, who had taken the implication of GST in capital market, which is a hot topic for the every practicing, I would say, chartered accountant. And I would like to thank my chairman, C. Anuj Goyal, sir, who had the vision of coming out with this virtual CPE meeting, to keeping in mind the members' view. And I would also like to thank Kunal, sir, for everything. So thank you, sir. Thank you.
Thanks a lot, sir.
Thank you, CA Amit Agrawal ji, for
Yes,
your vote of thanks and contributing in a great way in the field of research committee as well as committee on capital markets. Thank you, Kunal ji. And thank you, Amitoj sir and Navya Malhotra ji. We look
Thank you, sir.
forward
Thank
for
you,
your
sir.
more and more delegation.
Thanks a
Sure,
lot.
sir.
And
Sure,
we
sir.
are
Thank you,
really
sir.
grateful,
Thanks to
really
you, sir.
grateful for your dedication and devotion for the cause of the profession, for the cause of the members. So all the best to both of you, and we
Thank
look
you, sir.
forward for more and more contribution of our Amitoj ji and Navya ji in the activities of the institute. Thank you very much, and I am really grateful to all our honorable viewers from each and every part of the world. We are having around 4,000 chartered accountants for taking very, very active part. We will be sharing the PPT. Kunal ji will be coordinating with Amitoj ji and Navya ji. And my email ID is anujgoyal@icai.org.
Sure, sir.
anujgoyal@icai.org. You can send on my email ID also. I will get it circulated among
Sure.
the
Sure, sir.
participants. Anuj Goyal,
Please, sir.
ANUJGOYAL@icai.org.
Right, sir.
So
Really.
I will request all of our honorable viewers to take very, very special care of themselves and their family members in this time of Corona pandemic. Of course, the second wave is practically coming to an end, but we have to be very, very careful, because after second wave, as many of us were not so careful, so ultimately in this second wave, it was a very, very great problem for all of us. So I will request all of you to take the vaccination at the earliest, and please take very, very good care of yourself and your family members. Thank you very much. And thank you very much for
Thank you.
sparing your valuable
Thank you,
time
sir.
on this Sunday. So
Thank you, sir. Thank
have
you.
a
Thank
very
you,
good
sir.
evening. Thank you,
Thank
Navya
you,
ji.
sir. Thank you. Thank you, Anuj sir.
Amitoj
Thank
ji.
you, Anu, sir.
Thanks a
Thank
lot.
you,
Okay, Navya. Thanks.
Okay,
Bye.
sir, Amitoj sir.
Okay.
Thank you. Thank you, Amit ji. Thank you, Kunal ji.
Thank you, sir. Thank you, sir.
Thank you. Good evening.